everyone. Welcome to our stream. How is everyone doing? How is it going? Welcome. Let me know in the chat where are you following our today's stream from, and I'm going to be your host for today. So you guys are going to be with me for the first part of our today's stream. Okay, let me see the chat. Who do we have today on our stream? Who is joining us? And let me know where you guys are tuning in from. Let's see. Paul is here. Good morning, Paul. Good to see you. Be in the market. Welcome. Good morning. Victor and Jonatan are going to be joining us a little later. Good to see you here. Hey, Adil. Hey, how are you? Pierre is saying nice day for trading. Well, we do have the FOMC in the second half of the day, so we are going to, there we go. So we do have our FOMC. Let's see if the day is going to be indeed nice and what the day is going to be bringing us. Because we see that for the current moment, being the market hasn't been doing much so far. Perhaps it will change later on, but for the current moment, I don't really, I personally didn't yet trade so far today. Have you guys been trading? Let me know. If you did, then what is that you've been trading so far? Let's put some music on, perhaps. There we go. Let me know in the chat if you can still hear me, because I do know that sometimes music is cutting off my microphone, which it is not supposed to be doing, but it is still doing today. So let's see. Morning, movie clips. Hey, Gaber. Hey, James. Canada is here. UK is here with us today. Welcome. Hey, Rafael, good to see you. DJ, good to see you as well. Luxembourg is here with us. Cyprus, South Africa, Austria. Good to see you, girl. Welcome. Netherlands. Northern Ireland. You guys are from everywhere around the world. So good to have the community of traders for the fibers from all around the world. You amazing people. I'm trading DAX, Little Bear said. Okay, I didn't have a look at DAX yet, but we definitely going to be having a look at it in a second. Kenya is here as well. Kenya, Pakistan, Nigeria is with us. Amazing. James is saying waiting for setups. Took NASDAQ longs at the start of the week. Good. It's been going up, so I suppose you are in a good position right now. Okay, Nomi, I do see your message. You don't need to copy paste it constantly and spam the chat. I'm going to come back to your question in a second. So we do have the FOMC coming in the evening. I'm in the Central European time, so that's my time, 8 p.m. Perhaps yours is different. Usually before the FOMC, the market tends to be slow, especially the US market. We did have the unemployment change and rate in Germany earlier, as well as the PPI for France, which are quite important because we know that Germany and France are the two biggest economies of the European Union. So basically, those two countries do determine how the rest of the European Union is going to look like. We did have the change. It didn't do much in the market. We're going to have a look at it in a second. And the FOMC is going to be in the afternoon. So shall we have a look at the charts? Let me know in the chat, what do you want me to look at today? While we are here together with you alone. While you are texting in the chat, what would you want to see on today's stream? Which analysis would you want to make? Do you have any questions? Let me know. But so far, nice. Tuha is saying that the EUR USD is in her sell zone. Actually, this is exactly what I'm looking at Tuha as well. So this is Europe futures chart. This is equivalent for EUR USD. So if you add the EUR USD chart, which is not allowing me to do for some reason, but if you add the EUR USD chart on top of this, it's going to be almost one-to-one correlation. The difference is only in prices. So what we see here is that the price had consolidated here in the mid of May. That was right after my birthday. The price did go down. The price broke through. We had a retest, and now the price came back and is rejecting this area. So I'm waiting for my confirmations to sell Euro USD back here. So I do see what you see. I'm waiting for about 140 to 150 pips move to the downside for Euro USD so far. And but if you go down, this is 30-minute time frame. If you go lower, we will see that the price is still rejecting the daily point of control. So this is a daily point of control of the price. Would be able to break through this and close lower, then this is a chance that I'm going to be looking for sales afterwards. Daily point of control. As we know, the daily point of control has it in its program that it can move depending on how the volume is coming in the market. And this is a zone that I was waiting for the rejection from, which we see it did reject. But again, I want to see the price either breaking through this, rejecting, and then I'm going to be selling, or coming back here and creating some kind of confirmation in this area as well for Euro USD. So I basically do have my two scenarios for Euro USD for today's stream, and perhaps it can still come back to our entry point. So either the price is going to break through, come back, retest, and then I'm going to sell it from here, or I'm going to be waiting for the price to come back, give me some kind of confirmation here, and then I'm going to be selling Euro USD. So there's two setups that I'm going to be looking at today. Let me know, are you guys buying, selling, or not trading Euro USD EU? Let's remove some arrows from here. Let's remove some arrows. Okay, so this is my EU. This is something that I'm looking at. Okay, not trading. Yeah. On the EU long at the moment. Good, yeah. I do see the prices potentially can still go up. Again, it always depends from which perspective you're looking at, right? Because if you're from a smaller perspective, I still see that it can go up about 30 pips, 35 pips before selling and giving the confirmation for sell here. So I do see what you see. Let me check what you guys trading. Made over 200 pips this morning on gold in the market. Says great, gold has been moving. This has definitely been moving. I had my short yesterday opened and the price kept coming back. So I had my short here, the price kept coming back. So I did close it after all. Right now, I'm personally not, let's go back to gold, not touching it. Let's have a look at gold. I know that this is a hot asset. You always guys ask about gold. There's always someone who asks about gold every single stream. And I mean, it does make sense, right? It does move a lot. People love it. And but it also can be sometimes a tricky asset. So what do we see here if I remove all my volumes and everything? So we see that the gold is creating looks like a channel. We will, if we mark it up, we will see that we have the descending highs. We do have the descending lows on the daily time frame. And technically, we could expect the downwards movement for gold, because if I'm going to place my volume profile over this consolidation, this is a zone of the rejection that I'm waiting for. And the price did come back and reject it earlier. They already retested it before, and I was short earlier, already last week for gold here. Now, what we see here is that the price is coming back, but at the current moment, it's above the weekly points of control, the past week and this week. Both of those are currently below the price, which is not the good sign for selling gold. So from their pure technical analysis, from the pure price section, I do see the gold being bearish. Now, from the perspective of volumes, I do see the gold being currently bullish. And when I see this kind of controversial confirmations from different time frames, different types of the analysis that I do. I am usually not trading this type of methods. There is still, I do still see the chance that the price is going to go back here and then perhaps reject. But at the current moment, I would be bullish. I would be bullish for gold. We did break this zone here, so perhaps if the price comes back and retests 33.13, this could be a zone for entering the buy. We go lower, what do we see? What I'm interested in is that I want to see how the volumes were distributed on the way to the upside. So essentially, I'm taking this 5-minute move and I'm using the fixed range volume profile to be able to see where was the biggest volume traded on this move. And as you can see, it was right here. So perhaps this zone also can give me some opportunities to buy gold for the continuation of the move. And let's see if we extend that. The value area high is also going to be here. So this is a zone that I'm also going to be looking for a current short-term buy confirmations for gold until we enter this zone here. But this is a good 200 to 300 ticks to the upside on the futures market. So it can be quite good. It can be quite good. I know we always have I know that we always have people who are buying and selling gold at the same time. So are you guys buying? Are you guys selling? Let me know in the chat. Are you guys bearish or bullish on gold at the moment? Thank you. Thank you so much. We have an amazing team on the Fiverr stream, but surely not gonna lie, it's always nice to hear. What is the daily point of control? The point of control is essentially the maximum traded volume. So if it's a daily, you can guess that it is the point of control of the day. So the maximum volume per the current day. So for example, for gold, right now, the daily point of control is here, which means that for the past, what is it, like 10.5 hours, the majority of the contracts were traded at the level 3304.7.8. So the majority of traders and a big amount of money was invested on gold here, which if the price is above it, we can make a logical conclusion that the majority of the volume that was coming in the market at 3304.8, 3304.7 is bullish, because other than that, the price would be below it. So the volume that was coming here was pushing the price up. So this is another reason why I'm currently locally bullish on gold, because if the daily point of control is below the price, it means that it will potentially be acting as a support for the price, which, for example, it is doing right now for EUR USD. If we have a look at EUR USD, and I'm going to hide my drawings, we will see that the daily point of control is here. So look how the price came back, used it as a support, and it's coming back up, because if majority of the volume was traded here, then this means that the traders, the big traders, big market players who were buying EUR USD at the level 13335, buyers, when the price comes back to it, they are likely to protect the same zone, the same level, because otherwise their positions would go in the drawdown, and that's not what they want. So the daily point of control can act as a support, as a resistance. Okay, so depending on the context and where the price is compared to the point of control. Okay, so bearish on gold, shorting, bullish, short, and neutral. JJ said the neutral, and pretty neutral, James is saying. Expecting it to be ranging for a while, which is quite possible, James, because we have the FOMC coming. So it is quite possible that gold is just going to be ranging in between this zone. And we see that it was perfectly, barely not touching my zone. to give me the buying confirmation. So it did miss it with like, what is it even, like 3 ticks, 4 ticks, which is a shame, but maybe it's still gonna come back there. And if not, I'm not gonna be taking this trade. I'm not gonna be trying to catch it. Waiting for the tracement to 33.27 and then short. Okay. Jan, you can use the indicator on TradingView, which is called the PVP. Here we go. Periodic volume profile, or PVP. You just put it on your chart and you select the daily period, like this, the daily, and you will be able to have your point of control automatically being selected on your chart, so you don't really need to calculate anything yourself. It's an indicator that draws this kind of lines and measure the volume for you. As far as I'm concerned, income idea, I don't think we do have the giveaway today, but surely you're not coming here only for the giveaway. You're coming here for hopefully some insight, some knowledge, some great analysis, and some great vibe that we are trying to bring every single stream. USD okay, so shall we have a look at USD Not gonna lie, I did not have a look at it yet today. Before we're gonna go to USD another thing that I am looking for is GBP/USD. So what we see for GU is very similar situation as we have on EU. So if I'm gonna zoom out, what we will find out is that the price has reached the volume at this zone here, it's consolidation, and rejected it down. So the price did reject it overall, and we do have the point of control of the current week above the price, which by the same logic, right? We know that the majority of the volume this week was short for GU, okay, for the GBP/USD. And what we can see here is that the price is going down, the majority of the volume is above. And if you place our volume profile of this whole move to the downside, right here is the value area low. And I might be entering a short right now for GBP/USD. In fact, this is 1 hour time frame, maybe a little bit higher, just like a couple of pips higher, 2 pips. And I am going to be entering short for GU because we are below the weekly point of control. We are below this consolidation point of control and the value area high, which is great. It is coming back to my entry point really, really rapidly. Yep, that is right at my entry point right now, guys. So I'm gonna excuse you for 1 second and let me know in the chat if you have any questions. If you have any questions, let me know in the chat. Okay. So I'm looking for this move to the downside and I'm placing my stop loss. I think 15 pips should be enough. 13 pips should be enough, maybe even. But my target is going to be all the way this consolidation. So this is something that I'm aiming for. I'm aiming for GBP/USD to reach this zone here. So at least 34,365 and 34,100 level lower. So this is something that I'm going to be waiting for. And if it does work out, this is going to be a very nice 1 to 7 risk to reward. Let me see. USD JPY we should be looking at. Yeah, I don't know, guys. It may be long. Raphael, you may be right? And I may be completely wrong, and I might hit the stop loss on this. Remember, I don't have my crystal ball with me. It's out for repair for now. I'm gonna try to bring it for the next live stream, so we can ask the crystal ball if it's gonna be going up or down. But for the current moment, it's out of my hands. Can go up or down, and Raphael can be completely right. And I'm perhaps I'm gonna hit a stop loss on this, but I'm accepting this. It does look, based on my like my analysis and my strategy, it does look good, at a good setup. It's 35,472, 35,472. Yeah, Raphael, actually, if your take profit is going to be hit, I'm gonna be looking for another sell. So I do have 2 zones for GBP USD for a sell. This zone and this zone here. So maybe your TP is going to be hit and my stop loss is going to be hit here, and then I'm going to be re-entering for the next trade for sure. Also quite possible. It can happen. Good luck to boss. Yep. No luck in the markets. Okay. No, I don't check the COT. The best person to ask about it is LJ, as far as I'm concerned. Maybe LJ is going to join us later and you can ask him. I don't check it. I do check the open interest, but for the assets like oil, when I trade oil, but not COTs. Okay, do we have I like your confidence. It's not it's not really confidence. I mean, I'm confident in my trading system. I don't need to be confident in every single trade that I take. I just need to be confident in the system that I have, and that statistically the system is profitable, and that's good enough for me. Okay, so it's enough for me. If I know that systematically my system is profitable over the time, then 1 trade or 2 trades or 3-day trades and the outcome of them do not define, my confidence at all. Like if I have a series of trades of 50 trades or 100 trades, they do go wrong, then sure enough, I do need to review my system. But 1 trade hitting a stop loss, or 2 trades, or 3 trades, it can be the coincidence and it can be the part of my trading system statistics, right? The stats. So for the gold, we actually talked about already, but for those of you who just joined, I was looking for a buy from here, which the price did not reach my level. It missed my entry point. If the price still goes here, I'm still going to be looking for confirmation, and then I'm still going to be looking for buying gold. At the current moment, it's between my 2 zones of volume, so I'm not touching it, and the chances that it's still going to be consolidating before FOMC. Maybe not, of course, maybe yes. But I don't see yet the confirmation for gold. We do have our boss, your favorite host for the The5ers streams in the back. So I think it is the time to welcome him. Ready?
All right. What's up, guys? I think I timed that intro quite well. You did like a thumbs up and then play the intro. Nice. All right. How are you doing today?
Hey, good. How are you?
I am great. I'm great. Well, now I'm tired. I'm tired. I haven't slept very well tonight, so I'm a little bit tired. But other than that, I'm doing great. Just look at the numbers. They trying something new here to kind of switch things up. You starting the stream and then me coming in and looking at the numbers. It seems that yeah, they like you obviously. So I'm not even sure if I need to be here. Everything's looking really good, and you've done a really good job posting here in the first 30 minutes. What are we looking at?
I'm looking at GBP USD, and there is a chance that this is going to hit my stop loss first. We do have viewers who are long at the same moment. I'm short, so this is something I'm looking at. And I'm looking at, but the reason I'm selling it is because I'm also looking for a sell for EUR USD, which is not yet ready, but it is coming to the point very closely where I am going to be ready to sell it. So the chances are I'm going to sell both of those. And gold just missed my entry like by, what is it, like 3 ticks? 3 ticks. Gold being gold.
Yeah, gold really likes to leave everyone behind. I've been looking at USD JPY here this morning.
We did have someone asking about USD JPY. I didn't have a time to look at it yet.
All right, maybe I can take a look at that. So I'll take a look at the USD JPY, and not sure where the comment is, but I will take a look at USD JPY. Let me share my screen here. We can take a look at that. I've done some high time frame analysis and some low time frame analysis on the JPY. So I'm going to pull up the screen. This is gold here. Let me pull up USD JPY. So I'm going to begin with the weekly. And on the weekly, we're going to be adding my cycle analysis folder that I got right here on the weekly. And you're going to see all these beautiful colors pop up here. So here's this is on the weekly. Let me explain what we have here, which indicators the Fisher transform. Okay, so this is at the bottom here. This is the Fisher transform indicator, and it's an indicator that is designed to help guide a technical analyst in a market's cyclical behavior. I'm going to go into the details of how it works in another webinar, but just understand that the overall highs and lows in the Fisher transform should align with or could in most cases, and should hopefully align with the major highs and lows in a cycle. So a cycle is measured from the bottom to bottom. So basically this number 1, that's the start of a cycle, and then number 2, that's the end of that cycle. So you can see that USD JPY has gone from January 2024, started a new cycle, went up and then down, and this cycle took 38 weeks or 266 days. And then we formed another cycle. In that cycle, it took about almost the same amount, somewhere between 30 and 35 weeks, so about the same length on those two cycles. And you can also see here that the Fisher transform is aligned with these lows. So we have in USD JPY, first we had a very strong uptrend, right, marked with the green trend lines. Now some of you are going to watch this and you're going to say, oh, those trend lines are not correct, but it doesn't really matter. The trend lines are not there to predict price. They're just there to get a feeling for each of the different stages of the market. So we have the green trend lines telling us that USD JPY has been in a decent uptrend since the beginning of 2023. And also, if you zoom out, you see that the uptrend really started around here in November 2021. But we have very different market conditions. So see, here is just one type of market condition, then here's one type of market condition, and then now we enter a third type of market condition, which goes from a uptrend into a downtrend, and then the local lows and the general, the equal lows and the general highs that are close to each other create a range, basically consolidation, or I can't really call it a distribution range because it's too big, but it's a range. And within this range, we see a clear cyclical behavior for USD JPY. Now, we can look at the behavior of USD, and for those of you looking at intraday trading and things like that, we're going to get into the intraday levels. We're going to start with the weekly, we're going to go into the daily, and then we're going to go into the 4 hour, and then we can look at the 4 hour to see if we can actually get any type of direction using that. So looking at the weekly, we can obviously see just the short information. For those of you who are lazy and you don't want to listen to me speak, which I completely understand, we're at support and I'm bullish. That's it, basically. If we're at support, we should be bullish. But there are some key differences between each of these different tests right here, okay? So the first test, strong violent reaction here, and we have a bullish engulfing candle. It's a second candle, a V-shaped recovery, as you can see with these two wide trend lines. The second one, violent reaction, V-shaped recovery, bullish engulfing candle. The second one, we had the initial V-shaped recovery right here, but it failed, and now we have a double bottom. And although a double bottom is in most cases a bullish pattern, it has to you have to take that pattern into the context of the market that you're watching, and the market structure of the market that you're watching, and the current cycle of that market. And right now we see on USD JPY that this double bottom might indicate weakness, and it might indicate a fatigue or a weakness in the cyclical behavior, and maybe we are seeing the end of this cycle behavior, or we see that the cycle is just weakening. We can also see here that within the white circle, we're going to be adding the moving averages here. Within that white circle marked as a number 4, we also see that the 20 EMA and the weekly went below the 50 EMA and the weekly for the first time. We're going to be ignoring, actually it never happened, that for the first time since like 6 years. So, and we're going to be ignoring that because I view that as sort of a fake out. That's a major change in trend. We also see that this move to the downside, hitting that low, didn't really give us any higher lows and lower highs and lower lows within this move, but this one did. We broke below range EQ. We created a bearish rejection and retest of the range EQ. We never saw that here, right? And then we went down, had a V-shaped recovery, hit that level once again, created a second lower high. And if this is not the double bottom, then we might break down, and this would be the new trend. And what happens here is, what's interesting with this is we're right on the edge of a cycle move for USD JPY. So if we are printing a high time frame long-term bottom here, this is a great opportunity to look for long opportunities. But if we continue this trend to the downside, and we might see something like this, then what this gives us is, of course, a possible downtrend and a break of the range lows and an entry into a completely new cycle. Now, given the overall economic situation that we have right now with the Trump tariffs, and we had some news coming out of South Korea, the stocks rallying to all-time highs, showing a changing macro landscape right there as well, and changes in the yen. I'm not going to go into detail, but we have an economic landscape that is potentially changing and could mean that pairs like the US dollar and the yen is entering a new cycle. So we got to keep that in mind. But let's go into the daily to see if we can make any sense of levels here on the lower time frames. There's a few levels I have marked out here. First, the number 1 here, marked as number 1, that's the descending trend line. And this is the trend line currently, or the trend line area that is currently holding price down. And with number 2, we have the current support and resistance level. I would say that it's more support now because we're holding the reload zone, but it's also within the area, and price is kind of fluctuating between a SR level, a support and resistance level, and it can't really decide if it's going to be support or resistance. And we also have that trend line right above. So even if we do get a push above this trend line right here, a push up like this is still resistance, and we need to get a significant push, something like a new local trend starting to really see that move to the upside. I want to add the range EQ here as well. You can see here on the weekly here, we have the range EQ as well, and that range EQ of the higher time frames, as I showed you, these are the cycle lows. That's the range EQ of that cycle range, aligns with that number 3. Now, of course, a reclaim of number 3 would mean high time frame strength, but that's, if that happens, we already missed a major move. So the question is, can we see any signs of potentially moving up to that number 3 area before missing the move on the daily? So we can go into the 4-hour. These are the levels and the lines that I have here on the 4-hour. So we see here on the 4-hour that we had this initial push to the upside. This is the V-shaped recovery, push to the upside, failure to hold, comes down, hits the reload zone. But now it's reclaiming an interesting level right here, and we have a potential break of structure from bullish to bearish and then back to bullish. So for those of you looking to perhaps enter a long position on USD JPY, there are a few levels and a few ideas that you should keep in mind. The first one is a possible break below here and hitting the 0.618 or the reload zone of this level. Fantastic buying opportunity, most likely for the long term, right? Like we're talking about weeks and perhaps a month or even intraday. What I'm looking for as an intraday trade, stop loss below these lows, as a swing trade all the way down here, but below these lows and up to the local resistance at 146 is a decent trade with a good risk to reward, almost 2.6. And then of course we have the cycle range EQ levels up here. That's a 5R trade. But if we zoom out and we keep this long tool on the chart here, and we take this into the context of the higher time frame, so we go all the way out to the weekly, and we add the weekly analysis on here. Now, if this is truly a cycle move for USD JPY, we're looking for a move up to the range EQ, and we could easily get somewhere between probably around 10R on a swing. I got a new stock here in the background, so I'm going to turn that off. Man, that scared me. Wow, that's someone who's screaming in the headphones. There we go. I don't even have headphones. The speakers is the name. Okay, so that's USD JPY. Any questions on that? I think we have some pretty clear direction on USD JPY. If we can hold this level of support, I'm looking for a move higher. If we fail to hold this level, this entry below is absolutely fantastic buying opportunity in my opinion. Yeah. I could probably bet $100 that Anastasiia did not listen to that.
I did listen to this, and I found it's really interesting, the indicator that you showed in the beginning. Just trying to find out more about.
Yeah,
where's my $100?
I owe you $100. It seems. Oh wow.
I was also looking for a buy, so I have the same entry.
I gotta take a phone call. My mother-in-law called me. That's never a good thing. I'll be back in just a bit.
So I was looking at the same exact buy entry as Jonatan did. Well, almost, right? Jonatan, you're in the back. You're looking for something here. I'm looking for the price to come back to 143,770 and then take a buy. So essentially the same zone, barely maybe a little bit higher for me than for Jonatan, but I do agree on the buy. And the long-term analysis, of course, I have a different perspective than Jonatan does, but it's really good to see that it aligns. And I do see that it is a really good opportunity then. Usually when we have the aligned analysis, it is a good one to have. You guys are asking about GBP USD, so I'm going to give you an update. I closed my trade, and the reason for this is that the price had closed above my value area high level. which is not a good thing. If we look at the 15-minute time frame, this candle closed above. So what I wanted to see is in this analysis for confirming my sell is that I wanted to see the rejection, and the price tried rejecting. If we go back to 5-minute time frame, we see that we had the rejection, we had another rejection, and after all, we ended up with a short consolidation here at the value area high level, and we see that the price is struggling to go down. So I'm pretty sure that we will see this short-term, at least, continuation to the upside. So for those of you who've been following my analysis, I closed it. I closed my sell analysis for now. If it gets confirmed afterwards, reconfirmed, I'm going to still take a sell, or if the price comes back to this zone. So if you come back to here, I'm still going to be looking for a sell for GU. It's somewhere between 35,480 and 35,630 for GBP USD. What do you mean, Godson? Like, yeah, no clue. Even if I would let the trade run, my stop loss initially was like above this highs, but I did close it. So GJ is a waiting game for now. Hey Harash, good to see you. Thank you so much. It was last week. It was lovely. Thank you. Okay, EUR USD. Are you buying or selling EUR USD? Asking about EUR. I'm still waiting for it. As we can see, it went for the second setup here, and it did not give me the confirmation yet for sell. So I'm still waiting for it, and there is a chance that I'm not gonna take this trade today, because if you're gonna keep going up and you break this highs, this is most likely going to be the analysis that I'm gonna skip. I would prefer to see some kind of really good rejections instead of like a weak ones like this. But again, it's a FOMC day, guys. It is a FOMC day, and yeah, so we might not see lots of movements in the market. Ray volume profile, I'll apply on several different time frames. So I apply volume profile from daily to 4 hours to 1 hour to 15 minutes and 5 minutes. And the more volumes align, the better is the trade. So what you want to see is essentially if the price is above or below compared to the volume. If the price is above the volume, like for example with UJ, then it is a sign that it's majority bullish. So the previous orders that were executed, the position that were taken by the big market players, were in the buying direction. So this is your sign. Your sign also to go on. Now, if we are looking at, for example, GJ, right? If it comes here in this zone, this is going to be the weekly point of control. This is going to be the point of control of this whole move to the downside and the value area high. So this whole zone here is going to be the sell zone for GU, not GJ, GU. I said GJ. I need another coffee today. So this whole zone is going to be the GU sell because we are going to have the majority of the volume above the price, and it's most likely going to be acting as a resistance. Okay, so I use it on different time frames. Yeah, well, if it gives you lots of important levels which are not coming together in one picture, then this is a trade that you don't want to be taken, of course. So if some volumes are above, some volumes are below, you don't want to take this kind of trade, and this is what I feel with gold. Well, we still have space, to be fair, right? We still have space until the volume. The volume is here, and the volume is here. So I'm going to be trading in this range so far for gold.
All right.
Jonatan, you still alive?
I am still alive. I got my kids going to be picked up from the, what is it, daycare, day school, wherever. They don't have school today, so be got to be taking the rest of the, well, I'd like to take the rest of the day off, but that's not going to be possible. So I think I got to be working with him. Yes. Yeah. Okay. What are we looking at? Gold. You're looking for a move down on gold to that support.
I am looking at the move down, but not the moment. No. This is not the trade that I'm taking. I'm looking at buying it here towards this zone here.
So if price comes back down to that level, you want to buy again, but it has already kind of retested that level. So wouldn't you say like it's a second retest? Doesn't it feel like it's
No,
I'd say
not really,
No?
because it's gold. Because it comes back, it can come back several times to the same zone. It did miss it by 3 pips, but it didn't come back to the value area high of this move, to this consolidation. So to be fair, we have this zone here that it still can reject. So even if it would come down again, I would look for buy confirmations. I would take this trade.
All right, interesting. I'm looking at that and I'm thinking, well, yeah, of course it goes lower than it's actually testing level that it hasn't really been testing. But I usually look at it and I think, I usually look at it and I'm thinking, okay, the first retest has already happened. Now the second retest, I would always like to get in on like the first retest. But we know with gold, it likes to test the level, then it kind of fake out to the upside, then it comes back to that level. Gold is very unpredictable in that way. I wanted to quickly show 2 trades that I have open, is to update. I know we had a few people from yesterday wanting to know an update on that. So that is the AUD NCD trade, which is going well here. And for those of you not familiar with this trade, we can again look at the This is again a trade where we're looking at the higher time frames. So we're trying to do a top-down analysis on the higher time frames, and here we have on the weekly, we have this big range right here, and I've marked out the range highs and the range lows. As we see here, we got that middle line right here, the range EQ, or the range, the middle of the range, basically on the weekly. And if we go into the daily here, we have that hit of that high time frame trend line and printing a top formation here. The top formation I'm going to show you more detail on the 4 hour, but I'm basically looking at we had the first initial reaction to that trend line and the range EQ area, came up to that high time frame reload zone area and formed a top formation. Now I'm looking for a retest of the same area. So we had the first initial reaction and then a move up, and it feels like we could be testing this level once again. So on the 4 hour, we had this break of structure, as you can see, with sort of a head and shoulders pattern and a breakdown. I'm looking to take this trade now down to that front run, that 0.618 level right there. I'm actually going to go in and I'm going to move my stops on this one to entry. So what is this? AD NCD. Move that to, not moving it to exactly entries, right above. So I got the stop loss around here. Now, the other idea that we're watching and that I'm in is AUD CHF, and this is again watching the higher time frames. We see that thing that got me thinking about this trade is the fact that we're trading very, very low here. AUD CHF broke below a level that we have never traded this low for the Aussie dollar against the Swiss franc. Now, I thought that this would be a good buying opportunity to get back and enter the previous range. But what happened here was we actually had a rejection of the level. And if you look at the 4 hour, we have a fairly clean break of structure here as well, with a type of head and shoulders pattern. So I went short here, hoping that this trend is going to continue to the downside. But right now, it looks like we're potentially forming a bullish trend here with the ascending trend line area and these highs. So if we break above this level, that would indicate a invalidation of this idea. So for this trade here, I will move my stops down on this one significantly. I got my entry. Where do I have my entry? Yeah, I have my entry here. So I want to move my stop loss. Instead of having it above this high, the right shoulder, I'm now going to move it below this previous high right here. Because a move above this level would invalidate the idea, because we then get out of the channel and we print a bullish local structure. So that's the two ideas, the two trades I have in currently. Yeah, okay.
Pretty good. Yeah. AD and ZD was like flying to the downside.
Yeah, I think we had something with the central bank in New Zealand.
Did we?
I think that, yeah, we had, let's go and see if we had something. AUD and CD. Get the news here. Okay, no, maybe not.
I didn't see it. Maybe I missed.
There was something. There was something. There must be a speech, or like there was something with this. Okay, so let me take a quick look at gold. Okay, so recently we looked at two levels. We looked at number 1 and number 2, and I remember talking about how number 1 would be a good level to buy, and if this level fails to hold, then we're looking at number 2. Now, I don't really like the fact that we went down and created equal lows, but of course that recent 4-hour candle tells us that there is strength in this area. But I feel like we're so close to buying resistance, like this.
Yeah.
This zone right here, I'm viewing that as resistance, and then we got that trend line here as well. I'm not really super confident. What I would like to see from gold is a move down here. I would love to take a long in that area, because I could then.
I in gold yesterday, and I closed it around break even because it was just not going. But I agree with you. I see the same exact thing long term. Well, swing.
Yeah, because and now, I mean, we have this kind of looks very similar to a Head and Shoulders, which, like, you have a Head and Shoulders and you're at resistance, and I don't feel like that's a good time to go long. But down here, I feel like that's a really good level because it aligns with the daily. That's also a daily level. It's an untested level, and it makes sense. And I think also if we try to draw a channel here, this could potentially also be middle, maybe the middle of the channel. So let's see if we can add that. Not really, but almost. So you can kind of see how you could perhaps come down here in this general area here. So there's a lot of confidence down there. I quite like it. Let's see if we can have the EMAs on here. Yeah, the EMAs are holding up quite nicely around current price. Yeah, I don't know. I think when we have to do too much analysis, I think it's not a good sign. If we have to, look for a setup, if we really need to spend time to try to make sense of the chart, I think it's time to look at something else.
Yeah,
but
that doesn't exist. It's not there. You're trying to find the analysis, force the analysis that is just not good.
Yeah. I think you had a decent idea on gold there, I think.
Yeah, but I'm also, only so long, right? I'm bullish only towards this area. And if you look at this from the 4-hour time frame, for example, of hide the indicators, it looks like a little bit of a channel also on the 4-hour and daily. So I'm actually also expecting short after all, but it's just not giving the confirmation yet, at least. But also another thing that is not, is like 50-50 for gold. The silver, I use both of those and the correlation between them to make sense of one of the charts and trade the one that looks better. If you look at the silver, we've been consolidating here for a long time. Beside this, again, we are in a kind of a triangle in range, and we are in between two volumes. So this is the volume zone, and this is the volume zone, which is, it's stuck right now. My guess is, and I would bet that gold and silver would be consolidating here until the FOMC. This is something that I would expect from both of them. And we see that similar thing is happening with, for example, the same as GU is not doing much anymore, EU is not doing much anymore, and I don't think we're gonna have much of a movement until New York at least.
No, that kind of makes sense.
Yeah, Abdullah is saying GJ. I haven't looked at GJ yet, so that makes more sense now. Let's have a look at that.
Yeah, it's a big move from. Took a long on that yesterday. I closed it at some good profit. That's a really good breakout right there. We're finding support right now in the lower time frames. The question is, will this? It looks very strong. It looks like it could be continuing here, but it's difficult to catch a move like this. I believe it's quite difficult because it has good levels below, and I feel like when you see something where there's good breakout levels below, you kind of want those levels to be tested. It looks strong.
I'm definitely not long on this.
Okay, why not?
Because if you look at the hourly time frame, this is the rejection of this area here, the point of control of the week, and we see that the price perfectly tested 2 times to the upside, which is liquidity grab. And right now we have the point of control of the week at the level of 194.94, which is at the current moment acting as a resistance for the price. So if I'm going to zoom in, we see that the price had been having difficulties to reject this, to break through this level. It's been rejecting it for quite a while. And I would say this is something that is more likely from my perspective. Like another retest and move to the downside. And it's 100 to 115 pips to the downside that I would be waiting. So I am totally not long on this one.
Sorry if I'm just not really super focused today. I'm trying to, get people get people into the schedule. I gotta pick up my son from school and gotta try to get all the right people in the right places when I'm not available. So a little bit. Yeah, rough. And I'm also thinking about GPU. Like this morning, I did some analysis and I plugged in an extra screen because I thought, why not? And I got that blue screen of death, and the whole computer just crashed. So yeah, I really need that. Need to order one. I need to order a new one.
So what's your view on GJ?
Okay, so let's pull up the screen here.
I'm gonna leave you just for one minute and I'm gonna come back. But I'm listening for GJ in the back.
Bigger PCU as well, yeah. Bigger power unit. Am I ICT trade? No, I am not ICT trade. I do not trade ICT. No professional trader trades ICT. I'm just gonna throw that out. There's no professional trader is. I'm gonna get a lot of hate from that, but you talk to a proper professional trader, none of them trade ICT. Okay, so GBP JPY. Now, this is the breakout trade that I entered yesterday on GBP JPY. I can't really remember where I exit that one. Let's look at the history. Where did I exit that one? It was quite a good profit on that one. If I didn't take all these stupid decisions on Euro USD yesterday with all of those low time frame trades, man, we'll probably have passed the evaluation already, which kind of sucks. Guys, gotta let the swing trades do its thing, you know. Let's let it do its thing. When did I exit? When did I exit this one? Right, so I exited this trade here, so only like half an hour trade, but still. Which school of thought is best for trading? And that's a very interesting. That is a very interesting question, and that's the exact type of question that you should be asking. Which school of thought is best in trading? So ICT. So I'm kidding. What you have to do is you have to, first of all, are you going to be trading from a technical point of view, or are you going to be trading from a fundamental point of view? Now, what you need to do to get good at trading is you need to understand technical analysis. Do professionals use fundamentals or top-down analysis? I look at fundamentals sometimes. I do top-down analysis most of the times. It's not about that. Okay, so what you have to do is you have to understand what is technical analysis, what is fundamental analysis, understand what drives the market, understand what is the trend line, what is market structure, what is an order block, what is the Fibonacci retracement tool, what is the stochastics RSI, the RSI, the MACD, the MACD histogram, the ADX, all of that. What are these indicators telling you, and what is volume, and what is volume telling you about price action, and what is a bullish and bearish divergence? You need to understand all of that, and when you know that information, then you can start building a system. Trading is all about gathering the information. Study the information just like if you would study for a university course, okay? You go and you study information about what is fundamental analysis and all the components of fundamental analysis, what is technical analysis and all the fundamentals of all the components of technical analysis. Then you also have to understand the all the different orders, all the different types of orders that you can use in the market and how they're used and how you can use them and all of that. Then you start building ideas. From this idea, you start building idea. Don't buy a course. Like, do not go out there and buy a trading course from someone's like my trading system, because if you don't understand the indicators that that person is using, the course is not going to help you. And every single trading course out there is the same thing. If it's a technical system, it's technical analysis. You don't know technical analysis, what use is there to get a course on a specific system using technical analysis? When you have all the information, when you've studied for a year or maybe two to understand what really drives the market, then you have ideas. You start brainstorming ideas. And when you have the ideas, you can start building a system. When you have an idea of a system, you test it on historical data. If you have a system that is profitable on historical data, you start to test it on a demo account for future data. If the future data and the results in the forward testing tells you that it's profitable as well, then you have a system that is profitable. That is the right thought. That's the approach that you need to have in trading, okay? And it's not going to be easy, but if you want to make as much money as a doctor, then you probably should also study as long as it takes to become a doctor or a lawyer. You have to understand that the possible financial gains in trading is unlimited, okay? It's unlimited, which means, of course, you need to probably spend a lot of time to study, because when you're in the market and you're trying to make money, you're betting against and you're competing against the best of the best in the world in this field. And not only that, you're competing against trillions in capital with algorithmic trading bots and whatnot. So to think that you can get into the market, you just buy a course for $500 and you're all set, doesn't work like that. You have to really understand what you're doing and developing a system based on what you know. You will not see any professional traders saying like, yeah, you know what, I've been trading 10 years, profitable with this, and I bought this course. I saw this guy on TikTok, I bought the course $200, now I'm profitable, and I've been trading this system for that's not the way it works. You ask a professional trader and he's going to tell you a very long journey in educating himself on what works and what doesn't work and what fits his personality and all of that. So it's not one school of thought that works in trading. It's thousands of different things that works, but the question is what works for you, and that's a long journey. Okay, enough of that rant. Anastasiia, actually, I think I have to leave you, and then in about 30 minutes we'll have LJ coming on. Are you okay to continue alone?
Yeah, sure thing. I'm not sure I'm okay with LJ after the
All right. Well, we're gonna have LJ coming on. I think maybe Dirk is gonna come on in a while as well. But yeah, I gotta go. I gotta pick up my kid, and then we'll see what happens after that. Okay.
Of course.
Well, thank you guys. I'll see you guys later.
Okay, guys, we are gonna be looking at some futures. I'm gonna be connecting my second screen in a second. And hey, Florine, good to see you. I love how people like this make statements. They're like, every true trader understands the markets through technical analysis itself. And then you're gonna get very much surprised if you go and check what the actual fund management traders are doing, and you will quickly realize that this is not the technical analysis itself, and that has nothing to do with the technical analysis a lot of the times. I'm connecting my second screen here, and we are going to have a look at some futures together. I am Henry. I'm honestly not sure, to be honest with you, if he is on. But Jonatan says that LJ is going to be joining us soon. So let's see.
No, that's right. I think maybe actually no, because he got a rugby game.
He's playing rugby?
No. He's gonna watch a rugby game.
I was like, wow, that's something I didn't expect from LJ.
No, I got tickets to a rugby game from his broker. That's pretty cool. So yeah, LJ is not coming on. Let's see if Mike is coming on. If no one's coming on, Ali is going to be hosting this with my kid, and we're going to be doing like how to teach a 7-year-old to trade. That should be interesting. All right, whatever happens, I will make sure that it's taken care of. I'll see you guys later.
I'll try to stick around. Don't worry.
All right.
Okay, so this is a futures chart for gold, and this is a reason why I am not yet trading it. Because what we see here for gold futures is that the price is right in between the volumes, and this is literally the thing that I do not want to see when I trade. Like, I don't want to make this kind of, I want to get this kind of entries in the market, because we see that the price just broke through this volume, and I was selling it here yesterday when the price retested it, and then it kept coming back to the same zone again and again. So I was like, okay, I'm going to exit the trade. I did exit the trade, and the price went higher, and it is right now approaching the next zone here. So the next zone of volume. If the price goes here, I might be looking for a sell. So from here, I'm going to be probably looking for a sell for gold, but the prices did not yet reach my level. So 33.30 maybe flooring, but in fact I'm looking for more like 33.34, 33.44. like this is a $10 zone here. And if I look at the 5-minute chart for gold, we'll see that it's it's bullish. It's like clearly bullish because the yellow line is a developing point of control of the day. We see that it's following the price. It's acting as a support. We see we had the cluster volume right here. We have the majority of the volume here, and I'm expecting the price to continue to go up. So gold is more than bullish for me right now, at least until 33.30. But am I going to enter this? Probably not, because I don't have my entry points yet. Even if we zoom in, and if we look at the footprint charts, we will see that it's nothing really important has been happening here. Besides this cluster volume at 33.17, this is a level that I could have taken a buy from. But for the rest, nothing really crucial. Half of these clusters were empty. We do have some volume below, but it's not something that is, yeah, probably not something that I would want to take a trade from. Yeah, I don't really like gold today. Don't really like gold today, to be quite honest with you. Santiago, I base my whole analysis at the futures chart, actually. So my whole analysis is always based on futures, and then I take trades on the CFDs and futures. So I trade both different accounts, but I never take a trade without analyzing the futures market specifically. And the reason for this is that when you trade CFDs, your market data that you are getting is decentralized. So the only insight that you can have is you can have the insight into what has been happening on your broker platform. So which traders were buying, which traders who was selling, who was buying, and the amount of orders, so the volume that was traded on your brokerage platform. When you trade futures, you have a centralized market data, which means you can see all the kind of orders that have been executed around the world by every trader, no matter if you are a retail trader, if you are the hedge fund, if you are the fund manager, if you are the big market player, just a retail one, it doesn't matter. All the orders that are executed within the one centralized market. And this is what I love. You can actually see the division between asks and bids. You can see which levels were important. And the same data, now the TradingView recently released the footprint. Okay, so I didn't upgrade this. I can't show it to you because I had it upgraded last month, and I didn't find any using it. Because once again, even on the CME, even on the futures, the charts, the footprint chart on TradingView was not correct. So that's the reason I analyze futures, Santiago. I have been trading order flow for the past 5 years. And the 3 years before that, I've been trading the technical analysis, the Fibonacci, their technical patterns, price patterns, and so on. And then I shifted to order flow and volume, and this was a very, very big shift in my trading. I use Aras platform. So all my analysis I do here. Again, because TradingView is just not giving all the necessary data for me personally, just not enough. But yeah, gold is I don't think I like it today. I really don't think I like it today. Maybe it's because of FOMC indeed. Hey Firmeza, good to have you here. Welcome. Welcome to the stream. We go live every single Monday, Tuesday, Wednesday, and Thursday. So make sure that you join us, and I hope you're gonna enjoy it a lot. Footprint is nice for lots of things, Flora, not only for the imbalance as well, but it has many uses, like many confirmations. And I've been posting it in the ABL as well. Let me show you the breakdown that I posted in the ABL for all of you. It was a guide for the order flow charts. For those of you who have never had experience with order flow, that is the place where you want to start if you want to learn. Okay, I'm gonna share my screen. Another screen. There we go. So you go to ABL, AlphaBeta Labs. It's for free. So if you didn't subscribe yet, if you didn't create your account, it takes just 1 minute and you're going to be there. There is lots of free value, lots of different strategies, the discussion, the help. You can ask questions from your fellow traders, profitable traders, right? And the traders, just like everyone, is just the traders who are just getting started, intermediate, advanced, and you can communicate there and have the support group that is much needed when we learn how to trade. And this is the post that I'm referring to. So if you go to the strategy bank, you click on it, just a couple of posts from the top, you will be able to find my full footprint setups for maximizing your profits. You click on it and you will be able to have all their short guide into the order flow, how the orders get distributed. You will be able to find here the how the volume is calculated and how to customize your footprint charts. Okay, so this is something that you'll be able to find here. You can download the screenshots, print them out, and refer to them when you are trading. Okay. Good luck, Rick. Enjoy. I don't use EMAs, Phoenix, to be honest with you, and stochastics. I don't see the use in it in my personal trading. Like I don't really see any use in it. So I don't apply it. But I know traders who are profitable with using EMAs and stochastic. I know Jonatan uses EMA sometimes. We have other traders who use EMAs and they are profitable with that. It all depends on how you apply it. And the big part of it is, did you test your system? Did you back test it? Like Jonatan said before, like I really loved how he broke down, although I was listening in the back, how he broke down the fact that you first back test your trading system, you collect the stats. And then with those stats, if they are good stats, if you like them, if you like the outcome, you go and you forward test. And then you see, what you've been doing wrong, if you've been doing right, and you optimize your trading system. And then only you start trading your live account, a funded account, or whatever it is. So you can be profitable on anything, EMAs, stochastics, volumes, whatever you guys, whatever you apply. A lot of the times it's up to the trader and not to their system. Mohammed, I trade order flow and volumes, as you can see on the screen. And Abdullah, I do invest in crypto, not in Bitcoin itself, though. And I don't really trade crypto, so I don't trade it daily. Completely not my thing. Like I am not considering myself a pro in trading crypto. Futures, yes. Crypto, not. Yeah, so trading within the zone, you can start with ABL. It's for free. It's Mike is hosting it. You guys all know Mike. He's an amazing trader, amazing person. He's right there to help you and answer all your questions in the ABL as well. You have lots of different strategies. You can find different approaches. The order flow, you can learn here. This is a base. You can also learn other things. There are many absolutely incredibly valuable information there. Let me see. Did I miss any questions? Can you tell a bit about the volume profile? Yeah, sure. I actually covered that already before. You guys been asking about this for the stream. I have been covering it. Let me open the NASDAQ chart. Let me open the NASDAQ chart. Mm-hmm. What about EUR USD? While my NASDAQ chart is loading, let me share my view on EUR USD. So I've been waiting for the short for EUR USD when the price was here. I was waiting for the price to break through this low and then I would be selling it, which it didn't do. And my second scenario was when the price goes back to this zone, look for confirmations and then sell it, which I'm not yet convinced, because as we can see, we've been consolidating here and the price didn't really move lower. It didn't show any weakness yet. So I'm not really convinced yet to be selling Euro USD, to be quite honest with you. We see that it reached the weekly point of control. Okay, I still don't really see any signs of weakness. So I'm probably not gonna trade Euro EU today. This is a futures chart. This is a normal Euro USD. Yeah. So the other reason why I'm not don't think I'm going to be trading EU today is because of the point of control of the months. This is a monthly developing point of control. And as we can see, it shifted the position with the price, and the price is currently above it, which is usually a bullish sign, where there's the point of control of the week being above the price is a bearish sign. So there is a chance that the price will just get stuck in here, which is obviously not what I want to see for my trades. Like, I like my trades to either, like, I like them to go fast. I enter the trade, it goes either fast to stop loss or either fast to my take profit, the end done. I really don't like when the price is consolidating. Why can't you guys see the screen? I'm sharing it. Why don't you? Can you guys see the screen now? Can you give me heads up in the chart if you can see my screen? Yes. Okay. That something wasn't working because on my side it was sharing. Streaming platform. Okay, so this is a developing point of control of the month. This is the point of control of the week. The price being above this volume is a bullish sign. The price being below this volume is a bearish sign. And this is a situation that I don't like trading. Like, again, what I was saying before when you guys didn't see my chart is that I entered at a certain volume level, and either the price goes in my stop loss or my TP and I'm done, you know, like, that's it. I'm closing my trade, I'm done. And when the price starts consolidating around my entry point, which commonly happens exactly at these levels, when the price is stuck between two volumes, then this is something that I don't like trading. Hey, Edson. Welcome from Brazil. Amazing. Okay. Hey, Fabian. Good to see you. I do not trade smart money, Joseph. Completely not a smart money trader. Like, it's like I'm lacking, you know what's wrong with smart money for me? I'm lacking the context. Like, it's like the price is going up because there is a gap. Okay, but why is there a gap? What is happening in the gap? I mean, it's all theoretical, and I'm lacking the confirmation and the answer to the question why when I'm listening to explanations of smart money. Like, I know there are people who are extremely profitable using smart money concepts, but I think what is really important is to be able to answer yourself a question, why is the price doing what it is doing? And not feel like, not feel like, okay, I'm having some gaps in my knowledge and in my understanding. And this is why I trade volumes, because it does give me the context. Again, it can be something else completely for you guys. It can be something for someone else that is explaining. As long as you get your answer to the question, why is the price doing what it's doing, it's good enough. And this is NASDAQ. We've been asking about NASDAQ. I did see this. Mitchell is asking about NASDAQ. Is NASDAQ faking out? Mitch, I don't know which time frame are you looking at. Are you looking at the 5 minute, a minute, daily, weekly? I don't know. If we can see what is happening now with NASDAQ, is that we had lots of cluster volumes here yesterday before the market closure. So we had the cluster volume. We have also the developing point of control of the week here. We have the accumulation of volume. We have two big high volume nodes from today already above the price. So guys, you were asking also about a couple of words about volume profile. So Mitch, you've been asking about NASDAQ, and Erdal was asking about the volume profile. So couple of words about volume profile is that you essentially, the whole point, if you get this, you get the whole volume profile concept, is you want to see where is a big volume, where is a small volume. This is a big volume. This is where the histogram is increasing, which means there was a lot of money invested in the market at that level. So there is lots of things are happening. Lots of trades have been traded. Lots of money has been coming in the market at this zone, the same as this zone here, right? It's like a per how the price is formed, the per logic of market auction. No magic, nothing else. That's just how the market works. So if there was a lot of volume traded and here as well, and the price went down, it means that the big market players were mostly selling in those two zones, because otherwise the price wouldn't go down. The price went down because the orders that you executed here pushed it down. So there was a control of sellers in those two areas, which means right now those two areas can act as a resistance. So from what I see here on NASDAQ is that the price might continue to go down for a bit. So I would say that we can expect the NASDAQ to reach 21,371, for example. This is on the 5 minute time frame. Here is another high volume node and the clusters volume. And then the zone between the 21,300 and 21,275. But remember, this is futures chart. So if you trade on the 5ers account, you will need to adjust the price levels. This is what I always do as well. I trade several 5ers accounts, and I always just adjust the price levels and transfer them from futures to CFD data. It's pretty easy when you get used to it, but just don't forget that the levels are different. But this is something that I would be waiting for. Okay. Do you have free volume indicators on TradingView? Indicators not. As far as I know, this is free, this stuff here, because it's not the indicator, it's a drawing tool. It's called the fixed range volume profile, and it allows you to draw your volume profile at any point where you like it. So for example, I want to see how the volume was distributed on the move to the upside, and I place my volume profile from the bottom to the top. And I'm going to see where was the big volume, like for example here, where was there value areas, and where was the small volume. So, but indicators, I believe, to be able to have them on the chart, like for example, PVP indicator, or TPO indicator or visible range volume profile, you need to have the upgraded version. You need to have the paid version of TradingView. But the drawing tool with fixed range volume profile is completely for free. Yeah, you guys are most welcome. You are most welcome. I mentioned it like 5 times. 5 times. It's a PVP, it's a VRVP, and it's a TPO on TradingView. Okay. They need to manipulate the price down so they can push it up at earnings. This is my theory for today. Possible. Flooring, quite possible actually. We do have earnings and FOMC coming out later on. So I was taking the buy yesterday on S&P 500 from this level here. So this is my buy entry, and it almost did come back to break even. Missed it by like just a couple of ticks, as you can see. So, but I'm break even on this one. My stop loss is at break even. I still do have, like, I'm gonna be holding it because I already took the trade. But realistically, I would say that we are mostly bearish for S&P 500 and NASDAQ right now for indices than bullish. You guys are most welcome. George, I hope I'm pronouncing your name right. I use Aras. I know a lot of people use NinjaTrader. Just find something that works for you. Definitely not TradingView, because again, I was just explaining this. TradingView has decentralized data. It's impossible. It just can't. It doesn't exist. Like, TradingView does not give you the proper order flow data. It doesn't work. So either Aras or NinjaTrader or something else, but get the something where you have the centralized market data of all the trades all together. I don't have the YouTube channel, and my other channels on Telegram, I believe, are pinned to the description, so you guys can go to the description of the video and follow it if you want. And guys, I talked about GU in the beginning already, and 30 minutes after I opened the trade, I closed my GU trade. And the reason for this was this candle. Oops. So if you go back in the stream, you will realize that I took a short here on this candle, and I closed my short on this candle. So the next 15-minute candle. The reason for this is that the price closed, so 15-minute candle closed above the value area high. And I wanted a quick rejection. So I want the price to consolidate here, because usually if the price consolidates at the important volume area, it's because it's accumulating new volume to break through the old one. So I closed my trade on the next candle, which went above the value area high, because I was already expecting that if the price breaks the volume, it's going to use it as a support and then push higher from it. And we see that the price kept consolidating around this level and now is pushing higher. So if you go back into the stream, you will realize that you missed the part where I was explaining that I closed it in our, what is it, 1, 2, 3, 4, more than an hour ago. Yeah, but TradingView has a wrong data, Trader Joy, for futures. And that's a problem. Okay. Line chart candles. I have a normal Japanese candles, Trevor. So this is a normal Japanese candles. Another candles that you saw is this one. This is a transparent candlesticks. They are still the Japanese candlesticks, but they're just transparent ones. And the reasons I use them is because in this case, I do see all the volumes inside and I see the footprint easier. And another reason I use them is because when having the red and green bright candlestick, they can affect your decision making because our brain automatically perceives red as something aggressive, green as something positive, which we all know very well is not always the case in the market. So to be able to not be distracted and focus for a longer period of time without it affecting my decision-making quality, I changed my color of the candles from the aggressive green and red to black and white and then to transparent. So the majority of the time I trade on the transparent candlesticks, which you can see. Trevor, was this what you meant? Let me know in the chat if this is what you mean. Let me know in the chat if this is what you're asking for, because I don't use the line chart. Yeah, blue and gray work great, black and white, gray and white, anything that is not aggressively affecting how you visually perceive the market. Because remember, the longer we stay in front of the chart, the lower our concentration is. And you know, it just automatically, like, our brain can only focus for so long. It's scientifically proven that we need to take breaks. And if you have something aggressive in front of you, like some candles that are clearly very colorful, then the longer you stay, the faster you're gonna get tired. Yeah, great. Blue, purple and white. Great, interesting choice. Okay, guys, what are we looking at? I know you guys are asking about gold. Shall we look at gold again? Gold is retracing, which is very interesting. Let me open my 5-minute gold chart. Gold is retracing, and I did not take the buy, which is great. I want to see the price of gold going a little lower. There is a chance that it's just going to go up from here because there is a volume right where the price is right now. Or preferably, I would want to see the price lower. So if the price goes back to this zone here, I'm going to be probably taking a long. It's this zone here. So if the price is between 33.10, 33.04, I am looking for a long. Oops, sorry guys, on gold. Okay. Colorful guy. Yeah, so okay, so let's have a look at gold here. I did have my setup on gold. You see that the price is coming here. I'm going to be also looking for a buy. Yeah, 33.10 would be ideal actually. 33.10 is great. Like, I have it both on futures and on TradingView aligning. And if the price goes there, I'm going to be really seriously considering buying it. Okay, this question has kept being repeated. I'm from Ukraine. I'm Ukrainian. I don't live in Ukraine right now, but I am Ukrainian. DJ, how many times a week and month on average do you see your playbook setups repeat itself and during which session? Great question. So I trade mostly in the London session. So 90% of my trades are in the London session. About 10% are on the New York session, about 30 minutes to 1 hour after market opening. So it's 10:30, around 10 to 10:30 a.m. Eastern Standard Time, about 10%. So how many times? Well, quite often, almost every single week. Sometimes there is a period when I just don't see the good opportunities. I see the market is mostly ranging, or it is in between two different volume zones. And this has been this week, for example, so far. I took a last great trade on Friday, and since Monday I've been closing either partials, either break even, either a small loss. And this week has been like not really going yet great. Why? Because it just stats, right? It's just statistics. Sometimes the market is going to give you lots of great opportunities. Sometimes the market is just not going to give you anything. And the whole point is to be able to survive the periods when the market isn't giving you opportunities and still have money to execute the trades when the great period comes. So I've had, for example, an amazing last week, DJ, and this week is not so good. And it is just what it is. I'm waiting for gold to reach the level you mentioned. It's been bouncing from that volume cluster since the 22nd. It has been, did it? Yep. Yeah, it did. It is the same. It's just the same level. Did you enter the EU short? I didn't. Because look at this. This is what I've been talking about. I'm probably not going to take the EU short today at all. We see that this is a point of control of the week, developing one. So the price has been shifting with a volume. And now above we have the point of control of the week, which is the shorting sign. And I'm not really like, I don't really like how it looks. Let me share with you their futures, and you're going to get what I'm saying. So this is the futures for 6E, which is the Euro USD, almost 100% correlation. And as we can see here, close this one. So as we can see here, the price has been breaking through the developing point of control of the week. The developing point of control of the week is shifting. The price is trying to break this cluster volume and reach this level. But even if it reaches this level and it bounces back down, the problem with it is that it is going to be right stuck at the same volume. So I only see the potential short here for about 19 ticks, which is not worth for me taking because my stop loss is going to be at least 20 ticks. So I am not going to be shorting EU today because it's just Rafael is just stuck between two volumes. Probably not going to short it until FOMC, to be honest with you. Yeah, I'm seeing a very high chance that is going here. But then again, it might bounce, it might break through it and keep going up. I don't yet see any bearish sign for EU. The same as for GU, I don't really see any bearish sign yet. Arash, you're very welcome. Glad if it helps. What would you say about trading when the month is closing? I trade when the month is closing. The days when I don't trade is when the futures contract gets rolled into the next one, which happens for different futures contracts at a different time. Because, for example, currency futures and CME futures or index futures, they roll every 3 months. Whereas, for example, oil rolls every single month. So it depends. But I don't trade a few days when the futures contract gets rolled, because then the volume isn't accurate. A lot of traders are closing the orders, opening new orders just for rolling purposes from contract to contract for the next month's expiration. Beside this, I do trade in the end of the month, and I do trade news. The reason for this is that because when I trade volume, usually the volume news acts as a catalyst for the price delivery towards the zone where I'm looking for the volume from anyway. So with my system, it works. With my take on it is that I do trade it, which doesn't mean you should. in a sense that, okay, sometimes, it's better to not trade news. Like, you need to check it, back test it, and see if your trading system works with news events or not, and then make your own decision. Welcome, Rafael. Hope it helps. Thank you. Koya, hope I'm pronouncing your name right. Thank you so much. Pleasure. Okay, this comments is going away together with the altar. DXY, DAX. Okay, DXY. Let's have a look at Dixie. Where's my coffee? I've been trying to drink coffee today from the moment I woke up, and I woke up at 6. I still went for a hike in the morning, and I came back, and I still didn't finish my coffee. This is amazing. Like, I love my coffee. Like, how do people live without coffee anyway? Like, I know this is an addiction, but like, this is a good one. This is so good. Dixie. Recovered above the volumes, stuck in this area here. If we are going to place this is where the visible range volume profile is going to be a huge help. We can see that the price came back to this huge volume node here and rejected it from the downside. Now, this is the whole volume zone, but what is important is the current price reaction. So if we go closer, we will see that, oops, sorry, what is happening with my trading view? Here we go. So what we see here is that the price is trying to close below the developing point of control of the week, below the high volume cluster, below the point of control of the last week. I'd say I am bearish on DXY, maybe not right now yet, but it's going to depend for me like how today's day is going to be closed. So I would wait for the FOMC in the evening, and then after FOMC is either 98,570 that I'm going to be targeting for DXY, or if we go higher, then I would be targeting this zone here. This has been the resistance for the price for a long time, and the last time the price went here, it created the developing point of control of the week at the level 99.80, 800. So if the daily candle closes above, because what we see here is that candle, which is rejecting this high volume cluster, is not yet finished because it's a daily candle. So it might as well, after FOMC shoot up, close higher. And if FOMC closes and pushes the price of DXY above 99,200, I'm going to be bullish on DXY for a while. But again, this is an FOMC day. You see, FOMC day, and sometimes it's just not good. Yeah, that's exactly what I'm talking about. Let's motor car. Rio is amazing. Still want to go visit it. Enjoy the sun. So again, I'm expecting FOMC depending on what they're gonna say. If we are talking about tomorrow's PCE, because we have their PCE index coming out tomorrow, which is the most important indicator that Federal Reserve takes into account as a measurement of the inflation. So we have the core PCE tomorrow for the second quarter, and it is set to increase slightly. It is a seasonality pattern also, so we don't only need to have a look at how much it increases, but also the seasonality. Prices, price index. Let me open a couple of things here on my screen. Okay. This is a deflator. Okay. And it is not showing it again. There we go. So this is a core PC prices from quarter to quarter. And as you can see, it's been going up in the first quarter of 2025. And it is set, so the consensus is that is going to gain another almost 1%. Now, what we know about this is that the previous FOMC why is it not showing? Here we go. The previous FOMC conference, Powell stated that they are still waiting for the effects of tariffs, and they are yet looking on how the prices, the market is going to be reacting, and the state of the economy is going to be reacting after the tariffs, and what, the unpredictability of Trump has played a huge, major role in this. So what people are waiting for to see if the Federal Reserve is going to cut the rates finally or not. Can you guys see the screen now? Can you guys see the screen now? Yes or no? Can you let me know in the chat, because it is showing on my side, but StreamYard hasn't been cooperating with us today. Yes, great. Thank you so much. Thanks a lot. Thank you. So the unpredictability of Trump also didn't let Federal Reserve to cut the rates. And we know that tariffs are just were enforced in the beginning of the year. So the actual effect of tariffs are still going to be unfolding as we go this year and the next year, if nothing is going to get changed. So there is a very high chance that PC index from quarter to quarter is going to be increasing and going to be released soon. And it's probably going to be on the 3.5%, if not higher. And if it's going to be higher or as consensus, then we might see the XY going up, because what everyone is focused on right now is the effect of tariffs, and is Powell is going to be cutting rates or not, following what Trump wants from him, because Trump clearly wants the rates to be cut. But if the rates are not going to be cut, the dollar is going to go higher. The same as, for example, if PCE index is going to be higher than previous, higher than expected, it's also going to send US dollar to the upside. The reason for this is that the expectation, if the PCE index is higher, inflation is higher, logically investors and traders are going to be seeing that, okay, Federal Reserve is unlikely to cut the rates on the next FOMC meeting and the interest rate decision, and it's going to be leading to sending US dollar higher as well. And to see the expectations of people regarding the rates, I use something what is called the Fed Watch tool. Let me share another screen with you. This is a Fed Watch tool, and this has the calculation of days, the countdown on when the next FOMC meeting is coming. So we see the next FOMC meeting is in only 21 days from now, and PC, which is going to be released tomorrow, is going to be quite important for this. And here it gives you the probabilities of the rate has been cut. So we see that the current rate is 4.25450, and we have almost 98% probability that the rate is going to stay the same. The rate is not going to be cut. You have only 2% chance that the rate is going to be cut 25 basis points, which means that it's essentially, if PC is coming even higher than expected tomorrow, we are most definitely seeing the US dollar going higher. Yeah, we do know, we know. Simp is asking, what pairs should I focus on as a beginner? Can you please guide a bit? I don't think it works this way, to be honest with you, from my personal experience. You should first focus on creating a system, like find a system that works with you, find a system that makes sense, something that you understand, and start backtesting it. It's a backtesting of the instrument that you trade is going to tell you which instrument is the most profitable for you. So what you do is you create a system, then you backtest it for at least 3 to 6 to 12 months of data on 3 to 5 different instruments, and you find the ones that are the most profitable for you with your approach in your trading system. And then based on the statistics, you find out which instruments you trade and which not. And then you go and you forward test it on the demo account or a very small account. And then you compare the results between the forward testing and the back testing. You optimize it, and then you go and transition and you trade funded accounts, evaluation accounts, your own live accounts, and so on. Like, people skip this whole process because it's boring, because it's not exciting to go and backtest and find and collect all this data and find out which instrument you want to trade. What people usually do is hey, like, someone is making X amount of money with thousands of dollars, tens of thousands of dollars on gold. Okay, I'm going to go trade gold because it looks fun. It looks like it's moving a lot and I can make a lot of money. Or like, okay, someone is trading USD or NASDAQ. It moves a lot. I'm going to go trade USD and NASDAQ. And they go and trade it, but without backtesting, you actually don't know if your system is profitable on this specific asset or not. Your system can be extremely profitable on one asset and can be extremely unprofitable on the other one, because it's different volatility, different liquidity, it's different trading hours. For example, I trade major currency pairs. Majority it's EU, GU, it's gold, and it's as many S&P 500. There was a period of time 5 years ago when I only was trading NASDAQ and S&P 500. 100% of my trades were only S&P 500 and NASDAQ. Then market changed. I started trading oil. 90% of my trades were on oil. When market changed, I started trading. I backtested it, and I found out that the most profitable is gold, S&P 500, and major currency pairs like EU and GU. Okay, so this is the best way to do it, is to test it and collect the data. Bas, I feel you. I feel that I think we're gonna have a real big roller coaster with this guy for the next 4 years. So better get used to this. Koya, you can trade the same way with futures. Some futures, for example, on the agriculture products, they have different times when you can trade it. Like, for example, if you trade wheat, cocoa, and this kind of things. Now, corn, right? If you trade the same futures, like you trade, for example, currency futures, so euro or pound or yen, or you trade gold futures, or you trade oil futures, or you trade S&P 500, NASDAQ, Dow Jones futures, you trade exactly the same way. So you trade 23 hours, 5 days a week. Of course, the rate cuts are going to be much heavily weighted, but you don't really need the data to move the market. Remember that Federal Reserve is smart, right? The Powell is smart. And every single step they make is affecting the economy. So before making any changes, like, for example, cutting the rates or keeping the rates, avoid manipulation is always intervention in the market. If they say today, they come out and let's just imagine, they say, we are expecting to cut the rates on the next FOMC meeting in 3 weeks from now, the market is going to go crazy. Because right now we have 98% probability that the rate are going to stay the same. Imagine they come out today and Powell is like, we're going to cut the rates. Market is going to go crazy. DXY is going to drop. Nothing yet happened, really. Rates were not yet changed, but the intervention with words already impacts the expectations of traders, and the market is majority about expectations. So FOMC can be as significant as it can be not significant at all, depending on what is going to be said. So happy, so happy. If you have any more questions, if there is anything else I can help you with, please don't hesitate to post it in the chat. I love how you said it. UK Swing Trader is saying professional preparation precedes participation in the markets. Yes, amen to that. And you know, preparation is boring for a lot of traders because we see all these flashy things on Instagram. We see all this, you know, things that people do, people buy or rent, depends. And we are like, okay, I want to make money, and it's fun to be in the trade. It's emotional to be in the trade. It's something that releases a dopamine. It's not fun to sit and backtest, but it's absolutely necessary for profitability of a trader. DJ, you're referring to FOMC probably? No? Thanks for your previous response. In the past, how did you deal with filter out noise when you experience analysis paralysis with so much backtesting? Great question. Let me think about this for a second. How did I do this? I didn't have an analysis paralysis by backtesting. I had the paralysis by after the losing streak, for example. Like, if you see, like, you just need to be honest with you. I don't have the answer. The other answer to this is just backtesting. Like, you backtest it. You say, okay, I'm gonna collect the data for the past 6 months. If you, for the past 6 months, your system is proven to be profitable, like you tested and it's profitable, there is no more reason to, what are you gonna do? Test another 6 months? Okay, you can test another 6 months and you're gonna have 12 months of the past data, which is great. What are you gonna do next rather than trade? Well, you, of course, are gonna be trading, right? And trying it out. So it's important to backtest, but it's also important to collect the real market data. So I found that the best way to do it is you backtest, you collect the stats, you forward test, you compare the start and optimize your system, and then you start trading live. And once every week, for example, in the end of the week, you sit down and you backtest the week, and then you compare the backtested results to your actual results, and you see what could have you done better. If you miss the trades, why did you miss the trades? If you could have entered or exited the trade better, why didn't you do this? And how can you ensure that you do that the next time? And like this, you optimize your system as you go. And like this, you don't have a reason actually to have, you know, the analysis paralysis, because you are moving forward. You're still collecting data, you're still optimizing and improving, but at the same time, you are becoming profitable and you get an experience. So, DJ, I hope it helps at least a bit. Gold is coming down, you're saying. Let's have a look at this. I've been waiting for gold. So let's have a look at what it's doing now. This is my next support. Gold didn't yet approach it. I would love to see the level 33.10, 33.11. That would be great. So if the price comes here, I would be selling. I would be looking for a buy. So it's not ready yet based on my bias. Okay, it's not ready yet based on my bias, but let's see. I would wait a little bit longer. Let me shift to my other screen, to the futures, and let's have a look at this. there as well. Gold, my friend and nemesis at the same time. So so as we can see here, we have several levels. So we have this level 33.10 and we have the level 33.06. So this is a zone that I'm going to be waiting for gold to hit. When you come here, this is something that I'm waiting for, and then the price might go down up from here. But I'm going to be waiting for confirmation. I want to see the price reaction first, and then I'm going to be deciding if I'm going to buy it or not. Hey, Luis, welcome. Good to see you. It's been some time. How have you been? Привет, привет. What's the next support for gold? Again, 33.10, 33.06, as you can see on my screen. So this is, at least this is my opinion, right? Again, I might be completely wrong and you shouldn't be following what I'm saying, but this is just my opinion. What are my entry confirmations? My entry confirmation is a price action. It's a break of structure and it's footprint. Majority of it is a footprint and the cluster volume and the distribution between asks and bids and everything around the order flow. So entry confirmations would be only when the price reaches it. Like when the price is going to be in the zone, then I'm going to open my footprint chart and I'm going to say, okay, well, let's have a look at what is happening inside the candle. Are the buyers stepping in the market or maybe not yet? Because as we can see here, we have barely any volume. Like although the price is moving, what you can see here is that we actually have like barely anything happening. We have like zeros majority of the times, very small amount of contracts being traded, which is not a good sign. If there is a small amount of orders that is happening, it means there is no much interest in this specific asset right now. Or it might also mean that traders are waiting for something, like, for example, today's FOMC. So there is a very high chance we're not going to see any significant moves until we have more volume coming in the market. I see, Lewis. Well, I hope you're going to be here tomorrow as well. I'm still on for about 15 minutes with you guys. And then tomorrow, I'm going to be again here. Same time, same place. Yes, exactly. Collect the data through backtesting, forward test and optimize, execute in the live market and optimize weekly or monthly. Okay, because then this allows you to adjust to the market changes. And for example, when something happens in the market. And then, do I ever take a trade outside of your trading system? Not anymore, but sure thing I did before and it didn't end up well. So it's important to trust your trading system because we are usually standing in our own way if it comes to trading. I mean, if something works, just stick to it. If stats say it's profitable, then just stick to it and it's going to be profitable. It's going to be profitable. I use Ada's platform for this. Yeah, Brian, I know, but we all also know that with Trump, different things can happen and different things can be said. So it's still important to stay alert to this. Okay, so what do we have? Those are the futures levels, Stephen. Yeah, there is a 14 days free trial, if I'm not mistaken. All the links to my stuff is in the description, if I'm not mistaken, and like there is a lot of order flow free training as well, but I also explain it all on lives. There is an AlphaBeta community where I also share different strategies on the order flow. So this is EUR USD, and it's coming back to the same zone here, which is, again, it's stuck in between the volumes. So for EU, still nothing. So I'm going to be closing this chart today. I don't really see anything. I don't really like how it looks. And maybe GBP USD looks better. Let's have a look at this. Yeah, my trade would be now in profit, but I'm still not really convinced about it. It's like I'm still not. Yeah. Okay, if I would be holding GU, I would be now in profit, but I exited because of my trading system, and I think this is a really good lesson. I'm not regretting the fact I exited it, because when I saw the price closing above my volumes, I thought, hey, if the price goes to my stop loss right now, and I saw that the price closed above the volume before and didn't close the trade, I'm gonna regret it. And I don't want to regret my trading system. Like, I don't want to regret my trading decisions. So I'm not regretting the fact that I closed it early, because there was a high chance of it hitting the stop loss. So I'm completely fine of it going to my TP now. I don't do trend lines. I don't trade based on the trend lines at all. My personal opinion on this is that everything that we draw on the chart is us as humans trying to explain the complexity of the market. Like, if I'm gonna draw a trend line here, like the inner trend line, the outside one, and it's practically, it's, as we can see, even gets rejected, but it has nothing to do with the price at all. Like, the fact that there is a line now doesn't affect the market auction in any way. It doesn't affect the fact that there is more buyers or sellers. It doesn't affect who is controlling the market. If I'm gonna draw there, whatever, like a triangle somewhere here, it's not going to affect the market. So everything that we draw as a drawings on our chart is just to simply explain ourselves, try to explain the complexity of the market. It has nothing to do with the chart, which is the reason I don't use any of this stuff anymore. There was a period of time when I was trading this kind of patterns and all of that kind of things, and I don't do this any longer, to be honest with you. Gold is in my zone, and I am going to try to take a buy on gold right now. I still see that it might go even a little lower to, for example, 33.06. So there is a chance that it goes a little bit lower still, but I'm going to be preparing to take a trade already now. If you guys have any questions in the meantime, you can still ask. I'm on for about 10 more minutes with you. Okay, there we go. I'm expecting the price to go up from here for gold, but I also do see that it might go slightly lower still. So let's say that this is a zone that I would be waiting for the price to reject 0.430. Here we go, like this. That is gold. I use about 0.5 risk per trade initially, but I do add to my positions as they go. So if it's a winning position and gives me the confirmations, I'm gonna add to my trade. So it can be initially 0.5, and then the price is gonna go. I'm gonna add to my position. I'm gonna trail my stop loss, and I'm going to leave this position, and it allows me to maximize my win ratio, and it maximize my risk to reward ratio in the end. Wolf of Prop Street, by the way, really cool username. I love it. Thank you so much. Thanks. I do hope you're gonna come back tomorrow. I have another stream tomorrow morning. First 2 hours you're gonna be on, so hope to see you soon. Okay, so exactly, always stick to your trading rules. Amen. Hey, see you tomorrow. Good to know. Thank you. I don't trade support and resistance levels for the same exact reason, because the fact that I draw support or resistance somewhere doesn't mean that the price is going to reject there. So if I'm going to draw here the zone, I'm going to be okay. Here is the support, but why would the price reject there? So I don't use the resistance and support levels in a standard meaning of it, in a sense that I ask myself the question, why is the price rejecting at this level? Like if there is a support, then why? Why is this a level that the price is rejecting and respecting? Is there any buyers that are actively protecting this zone? Is there, for example, absorption of sellers that perhaps is happening and not allowing the sellers to push the markets through? So I don't trade support and resistance in this sense, but perhaps you can say that I do trade support and resistance just by the different meaning. I'm asking myself the question, why is this rejecting? And then I can trade from the same support level, but the reason behind it is going to be different. Welcome, welcome. Hope it helps. Fabian, Jonatan, I'm sure Jonatan is in the back and he's listening to us. We all love Jonatan though. I'm not sure in Kamari if this is a compliment or is this the opposite, but I'll just believe that this is a compliment. I'll just take it as a positive thing. Lines don't affect, but do they show the history of the asset? I don't find it helpful because support and resistance levels can be as easily broken as it can be held. So for me, the support and resistance, the fact that price rejected there early isn't enough. I want to see the reason why it rejected, and I want to see what is happening when the price approaches this zone. I'm going to show you something now. This is gold. And you can say pretty much that this is a support, right? You can say that, okay, this is a support level because the price rejected here earlier. But and the price it was a resistance earlier that became the support, and then the price is rejected now. But the question is, why is it happening? Like, I'm gonna come here and I'm going to check out what is happening. We see that sellers stepped in this candle. You see the bearish footprint. The whole footprint is dark, bright red colors, which means we had more aggressive sellers than aggressive buyers stepping in the market. We had here their first try of buyers to push the price higher. And then we see the price went down. We have lots of red deltas. And we see the one bright green one at the bottom. This level now can hold the price. So if the price comes back here, this buy level might be the reason the price is going to reverse. Or it might not. So I'm going to enter the trade when the price approaches back my 3310.8 level. And essentially what I'm trying to explain is that besides just having the support and resistance, I'm trying to see what is happening behind support and resistance. Why is the price rejected there? Is there a buyer or a seller right now in the market? And then I can like closer understand, is the price going to be rejecting or is the price going to be breaking? Thanks a lot. Thanks a lot for this. Really happy that you are all enjoying the stream. Maria, this is not the indicator. This is a footprint chart. And it doesn't work on TradingView, so you can't get it on the TradingView. You can get it on the futures trading platforms. Okay, guys, give me 1 second. No, this is not on the TradingView. This is on the other futures platforms. Okay, so yeah, everything works. Support resistance work, trend line work. It depends usually on the trader and not the system behind it. But system is of course important as well. I'm gonna return to you guys in a second. Okay, FRVP setup. Well, I can't share with you FRVP setup if it's not there. Sorry for that. He's supporting the stream. FRVP is this drawing tool. And at the current moment, if I'm going to place my FRVP, for example, here on this move to the upside, what we will see is that we will see that we have the high volume node here. But based on FRVP alone, I would be taking a trade right here in this zone and not high, like not where I am right now. And this is why I have other confluences and I'm looking at the footprint as well. Essentially what you want for VRVP is you want to check how the volumes are distributed. Like for example, this setup for a sell, which would have been a great sell, was based only on FRVP itself. So what we see is I place my volume profile, FRVP, from the top to bottom, and I see how the volumes are distributed on this whole move to the downside. So we have the several high volume nodes, like for example, this one and this one. And this is also at the same time the value area, not high, but low, which is a typo here, value area low here. And we can see that the price is rejecting this value area low. So the whole point of fixed range volume profile is you find the high volume nodes, you find important levels, like for example, point of control of value areas, and then you trade from those levels. I started using volume profile 5 years ago together with the footprint charts. And before, it's a funny story, before I was trading Fibonacci's and I only was trading S&P 500 and NASDAQ for like a year and a half or 2 years straight on these two assets using the Fibonacci golden ratio. And at that moment, it was working out perfectly. But that was like the end of Trump's presidency. The market was smooth. It was a great timing. And then the COVID happened, and then the president changed in US, and the liquidity changed. And I was like, okay, I do need to change my approach because it stopped performing. Yeah, they are. Volumes together with the order flow, I find it really gold. But again, everything can work. Depends on the trader. Depends if you back tested it, if you back forward tested it, and essentially this is a key. But anything can work. Like even the strategy of like throwing the coin and like can be profitable if you just manage your risk correctly. Okay. Fantastic. We do have Victor joining us. Victor, welcome. How are you doing today?
Hi, Anastasiia. How are you doing today? How is everyone watching us? This is a beautiful day. It's always a beautiful day to trade. How is the market on your side, Anastasiia?
Slow before FOMC. Perhaps I don't really see anything much happening before FOMC, to be honest with you. I'm waiting for my gold, but not sure. Yeah, not. Yeah.
Are you long? Are you looking for a long or a short on EU or GU?
So I was short on GU. So this was my initial trade, and I closed it on this candle because it was closing above my volumes, and at the current moment it would be already 20 pips in profit. But no regrets. It was based on my rules. So, but I was short.
That's where I got in, to be honest.
Nice.
So that I had a signal in there in that candle, as it was on the lower time frames, of course, and it's moving quite nicely. It may stop me out and give me another signal, which I need to then enter, of course. But maybe this is the only signal I get, and maybe it goes in my favor. Who knows? We'll see. Awesome. Well, not awesome for you that you got stopped out or you close your position, but that's how it goes, right? We don't feel bad about losses. It's just part of the game.
Exactly. It is just part of the game, and again, it wasn't a loss; it was break even. So, and it was based on. It's important to just stick to my two rules. In any case.
That is yes. So I'm going to be. I suppose you did some analysis already on the EU pair and so on.
Yeah, I did. EU is not though. Like I don't really have the analysis on EU so far. GU I did, and gold we did, but we have more new people joining, so I think they're going to be quite interesting to hear your approach as well.
For sure. I don't want to hold you here too long. I know, Anastasiia, you have some other commitments. So feel free to let me know anytime your time is up. I want to say hello to everyone. I know I did that.
I'm going to leave you now. I'm sure I need to go, guys. Thank you so much for listening to all of this today. And Victor, thank you so much for joining. Happy to see you. Hope to see you again tomorrow.
Yes. Likewise. Thank you, Anastasiia. Have a great day. Before we continue, we will have a little intro to start things off. Awesome. So let's get going. I'm ready. Are you ready? Are you ready to make some dough, some money, some bills in the market? I know I am, and the whole thing is to be prepared. Ready you can be, but are you prepared? That perhaps is the better question here. So I hope you are, and let me take you away, and we'll discuss everything related to price action, as you know, I do look at the news event coming up today or on any trading day. And today we have, I'll switch quickly to the calendar. Most calendars you guys watch. It tells us that there was some Kiwi high impact news, red folder, right? Monetary policy statements or the interest rate. And there is at 4 at the end of our stream, we will have, well, for me, of course, there will be some orange folder and FOMC at this night. For me, night 8, that would be. So we don't have in the coming, few hours, we don't really have any big impacts. News, orange folder, but not red. And the FOMC, of course, that could change things, but it's not going to be affecting at least the way I trade, because typically my entries are for a day trade. So I look to close the position at the end of the day. They should be getting to my target. And if they didn't, I still will be looking for an exit by the end of the day. So that means that the FOMC is not going to be an issue. If anything, it could be a catalyst, but not something that I need to worry about in terms of volatility coming in and spiking me and stopping me out in the trade. So let's get going. Let's look at the chat. People are very appreciative of Anastasiia. We are, of course, we are. She is a great trader. She is. By the way, guys, if you want, right, to have hosts like Anastasiia, like Dirk, like so many we have in our show, there is a way you can make sure we keep on adding, great hosts, like a great trader. It's by hitting the like button. It's by subscribing to the channel, because that's how we see that you appreciate the content we have. It sounds like a broken record, but that is the lever, that is the button, figuratively, but literally, that's the way you can make sure that we continue and keep on growing with our content. So that's going to be great. Let's look at and what I like about having different hosts, and you should too, is the different approach that each one of us bring to the table. That is what you want to be exposed to as a trader. You want to see, based on volume, you're gonna want to see order blocks. You want to see EMAs. You want to see all kinds of different indicator or different charts types. You name it. You just want to see as much as you want from good traders, authentic traders, not someone who says something, but is not vetted by anyone else. We here. We know what we're talking about when we show these every day. So the best way is for you to make sure that we can continue to provide that kind of content and keep on bringing more hosts for your benefit by and the way you can do that is, of course, by letting us know with some likes, some subscribers, and by the same token or the same breath, I would like to thank everyone for our 70K subscription or subscriber we just hit yesterday, or we were celebrating it yesterday. All right, so let's get to the chat to see what we have in here. Market is manipulating for FOMC. That could be certainly the case. I see you with Jack as well. Hello, Jack. Gachara, wherever you may be from. I am glad you are here. I wonder, Jack, where you're from, but that's just my curiosity. Someone asking here what country I am from. It is an undisclosed location. I'm not allowed to disclose that. It is a joke, but it is actually true. All right, so not really. All right, so let's get to the to the charts, right? We see some great folks in here, regulars in our community. Let me check, because I think I don't hear anything. Let me see. Do you guys hear some sound? Yeah, I do. Okay. It's not that slow, that soft. Okay, all right. So that's perfect. Okay. Yes, she is. She is wonderful. She is very good, and she has a way explaining things. I talk about Anastasiia, of course, the way she explains, things that are not exactly very complex, but still somewhat difficult to understand sometimes. She has a way with explaining it, and I like that. I will take that as a huge compliment that I have a Japanese accent. Maybe I'm from Japan. Maybe I am. Look at me. Maybe you recognize me from walking down the street in Tokyo. Could it be? All right. Okay, so let's look at the market. So let's start with the what are we expecting for today? What am I expecting for today? And perhaps you can share with me what you expect for today in the chat. Where you're going, where your entries, or what the areas are that you're looking to get some profits from this market. All right, so let's look at the monthly time frame. Do you guys see anything in particular? Does this market tell you? Let me just take away everything. If you see this, no matter what time frame this is, does it make you do? Do you want to be buying or do you want to be selling? Just first impression, first thing that comes to mind. Not, based on something, of course, right? Experience or candlesticks or whatever you may, but what is it that you want to do when you see this? Anyone bullish, right? Maria Foster, right? Why? Why do you want to be buying this? What makes you think, maybe I'm from Nairobi? Yes, I think you're I think you're Malaysia. Maybe I'm from Malaysia. Who knows? It's a big mystery. All right, so coming back to buying, says Prince Luca Nani. Yes, I would definitely, right? It's very simple, very simple. I like to keep things simple. There's momentum. Bass Killer Hill, thank you for that. Yes, that's momentum indeed. Swept the low after chilling. Okay, so it's chilling according to Sam Morrison, and swept that low and then went up, right? That's liquidity. That's the theory of the market getting liquidity, getting fuel, getting those stops, and then going the opposite direction. And that's exactly what it did here as well. So wick down completely. Do you mean this wick, or do you mean the current wick of the current candle? Bin a protein. Which one do you mean? Reversal from a consolidation and momentum. Yes, that's exactly, Maria. That's exactly the liquidity description that we're talking about, right? You can see it from different angles and different perspective, and considering the liquidity and all of that. Very simply, you can see, some of you said momentum, and that is, you can see look at the size of the body. This one, look at the size of the body of the second one here that I'm indicating, and the third one. What do you see? Do you see the size of the body being increasingly bigger? Do you see that? Do you notice that crescendo type of movement of the body, of the size of the body? Well, that is one of the signs of momentum. There's acceleration. That's exactly what the size of the bodies are telling us, right? It's accelerating in its directional volatility, in the movement it takes from open to close. Okay, so that's the movement from open to close to any given period is, that's the net result of all the sellers and buyers during that candle, during that period. It may be this is the monthly, but this holds true for every time frame. It doesn't matter. So the momentum is to the upside. Okay, that's one thing. And if you see this candle, just this candle, forget about the rest. Forget about the rest. If you see this candle, what do you want to do? What does it tell you? Do you want to be buying, or do you want to be selling? Just the candle. I know it's very simplistic. you don't get profit from the market with just one candle analysis. I know, but what is happening in this candle? Can anyone tell me? What happened during the candle, during that wick? Maria Foster, yes, buying, exactly. Martenio Martin, yes, buying, exactly so, right? But before we had the buying, obviously, let me go deeper into that candle. Okay, we are at the end of the month, right? It's the 28th. So there are, let's see how many trading days. There's only, if you don't count today, there's only 2. Basically, we're at 90% of the period of this monthly candle. And if we zoom in, because I said it's only this one particular candle, let me take out everything else. If you see this, obviously we said it's about this small body candle. Maria says the other way around. Indecision, says Louise. Yes, there is an indecision indeed in the net effect, right? Because so far there is a small body, right? That candle, there is a small body, and small body means that from the open to the end, the market participant collectively couldn't agree if they should, if the fair price should be higher or lower. Otherwise, they would have, buy in and push it higher, or sold it and push it lower. That's what I mean. So there, you certainly have a point there, Louise. Very well said. One thing though, before we can go further, what I want to focus is on that wick. Before we, of course, the open is here. It's a bearish candle, so the open. Let me blow this up a little bit. So right, so the open is it's there, to be exact. That's the open. And since it's a bearish candle, currently that's the it's not closed yet, but that's, if it were to close, that would be the close of the candle, right? So what it tells us is, I want to focus on that wick. In order for that wick to be formed, one thing has to happen first, right? Which is and this is the monthly. So for quite a couple of days, maybe even a few weeks, maybe more than just a week, there were a lot of selling taking place. Otherwise, that wick would have never been created. Okay, so before we had the buying, yes, that wick, rejection wick, does tell us that there is a lot of buying, that the buyers are in control. But before that happened, we did have a selling, the sellers being dominant in the market, and that's exactly what creates the move down, right? For that moment, when we were at this lowest point, this was showing a large, or not a large, but a bigger body, a lot more bigger than it's looking right now, bearish candle, right? Meaning that all the sellers were probably thinking this is going to go much lower, because we're showing, not printing, showing a large bearish candle at that moment, only to later on being realizing that you are at the wrong side of the market, the sellers, I mean. Why? Because all of that selling has been negated basically only for a little. What is this? This is a monthly time frame, and we're talking about perhaps about 10 pips. Not even. I think it's more like 7 pips, right? On a monthly time scale, that is really nothing. Okay, so it means that the whole wick, the whole movement down was negated, was reversed. So what does that mean? It means that, and if you put that in context, where we had bigger candle, big candle, one way crescendo, meaning with a lot of momentum, being able to do this, we had a retrace, right? And the primary momentum direction, right? The direction of the momentum, the trend in this case, got back and took control again. Okay, I have some MT4 in the background. telling me that they have no connection, but I think I'm fine. All right, so just making sure that you guys are receiving my stream. Okay, so what it means basically is that you have trap traders, sellers that are unable, that are not unable, sellers that have at some point likely are, if they haven't been stopped out yet, they will be stopped out soon, right? Meaning that you will have, you already have, but you will have, as more people are seeing this candle, you will have a bullish pressure or buying pressure coming into the market, not only for the ones that created this wick, but even afterwards, right? So if you go to the lower time frames, you will see that, let me come back, you will see that all these buyers, right? Sorry, all these, the sellers that participated in these 4 weeks of selling, this is the weekly time frame, you know, their not ultimate, but if they bought within this candle, they probably had their stops above these highs. And as they're being stopped out, you know, you get this influx of buying pressure, right? Because you're selling a short position, you need to be buying it back to cover their position. So you will see that as we are breaking more and more of these levels, buyers will be coming in, and a price is likely to continue higher. And that's the exact idea when we look at the bigger picture, even without knowing exactly how the candles on the weekly and the daily and the market structure and all of that. Just by looking at the candlestick, you can understand that, one, the sellers are with their backs against the, you know, the wall, and that the buyers are gaining terrain, and they're gaining it with in the context of already being in control, meaning that the likelihood, if it closes like this, the likelihood that it has at least some kind of continuation is quite high, right? Nothing is certain. It can reverse back. You know, things can happen geopolitically that changes this dynamic completely. But so far, if nothing else changes, we can expect for price to continue to go higher. Just on very simple, although we do go in and analyze what happens within that candle, you can read a lot just by understanding the dynamics, that how each candle and its parts, the body and the wicks, are being created, and where exactly it's doing that, in what context, what it has been doing so far, and what it is signaling for the future. Right, so we do have that. In terms of order block and quasi, there isn't any actionable thing to say, other than we do have a a bullish order block that was created on a weekly time base. We may go test it before we continue. Remember that higher time frame expectation to go higher. Where is mine, Anastasiia? Well, Anastasiia is I'm replacing her for the time being. She will be with us again very soon. So if you just keep tuned in from now till for every hour coming, at some point you will see her again. All right, so that's the general idea, because but that's not enough to trade. Just one thing is not enough to build a setup. A setup has to be built with multiple arguments, and not just one thing you see in the market, right? Trading isn't that easy. It's not like you see one thing and that's it, you buy or you sell. There's a plethora of things that need to be aligned, and to a certain degree aligned, in order for you to have a good chance, right? And also a little bit of timing, sometimes a bit more than just a little bit. All right, so we do have that order block on the weekly time frame, where it's not relative for today's trading because we don't have price reaching it yet. Let's go to a daily time frame to see where we are at things. So one of the things we see here is we have we did create, you could say finally, but we did create a bearish order block after having created two bullish structures. Now the question is, after we have, we are coming from a weekly and we have a higher time frame expectation for price to eventually continue higher. My question would then become, what path, what pathway will it use for that direction, right? As long as that weekly is still holding, I'm going to be expecting for price to going higher. Well, obviously, this is a demand area and another demand area. That's how my order blocks, that's what they are. They are demand area, and supply and demand is, a very foundational theory. I only use order block as an alternative way of marking them. But eventually, it's the same phenomenon in the market that creates both of them. So we only have two on the daily time frame. We only have two structures here that are the likely areas of where the market will eventually, possibly, change to the upside, right? So we can have either to where it currently is, right? By what I mean by that is a continuation from this this direction after having retested that first order block, or perhaps the second one, right? The second one has also the weekly, so you do have more alignment, but it doesn't have to always go back to that weekly. Sometimes there's a lot of momentum. It doesn't retrace that much. It just needs the very first level, which is in this case this daily, before it can continue. For an intraday, obviously, your target will just be the next order block, because you don't know in advance if the market wants to do, after, let me take that away. You don't know in advance what, how often the market will, how low the market wants to go, because this order block, this bearish order block, hasn't been retested yet. Okay, so it means that, it may, on the first retest, it may be broken. That's perfectly fine. But we do know that these structures, as those engulfings, they tell us something. They tell us that these sellers, there will be sellers, likely sellers there to sell that market again. So, this kind of path is not too unlikely, right? And this doesn't go against, it doesn't invalidate the earlier expectation or the bullish bias we have on a higher time frame, on a one step higher than the daily, right? This is perfectly fine. Even if it goes lower, it's perfectly fine within this bullish bias we have. Okay, so you gotta keep open for different scenarios, and the safest in this case would be to just target initially, at least for either the whole position or a portion of it, a good portion of it, at least half of it, which is targeting the very next structure on the other side, which is that daily order block. So that's one idea, but we need more alignment, more confluence in before we actually take that trade. So let's go to the lower time frame to see if we have an entry here for going long. And what do we see here? Can anyone tell me what we see here in this current place? What does this make you? What's the first thing that comes to mind? I'm gonna let me see. I'm gonna go while you guys are thinking about this. Let me see where I got this. All right, I'm gonna go on a very short pause, just a couple of seconds. It's gonna say 1 minute, but I don't need 1 minute. I'll be right with you guys while you guys are analyzing this few candlesticks and telling me, think about this. Where would you want to be buying or selling just by looking at this? I'm not talking about setups, risk reward ratios. Just are you looking, if you see this, are you looking for a buy or a sell? Just looking at these candles, not what we talked about on the. Oh, Jonatan.
Hey.
Hi.
I'm gonna heard that you're taking a break. So luckily, I was walked through my office here, and I heard that you need a break. So
I just need like 20 seconds.
Yeah,
I'm gonna be right back.
Yep. Okay, so How are you guys doing? How are you guys doing? Let's see. What is he looking at? Because EUR USD, is that a buy or a sell? Good question. I would say that given the fact that it's a higher low, I would say a buy, but I think a reclaim of the 4-hour order block that he has right above price, a reclaim of that one would be a buy, and as long as price can't get above that order block, it would be a sell. Am I correct?
Yes, you are. I'm back. For those who are watching, yes, or not watching, I should say.
You're looking to short that local local 4-hour order block, but if you get above that one, then the short isn't validated, and then you might want a long.
Exactly. To me, what's important is you've been paying attention.
Yeah, sorry, you gotta go ahead alone. I gotta my kid is outside here, but
thank you for jumping in, Jonatan.
See you guys later.
You're the man. All right, so let me thank you. So yes, so when we come in, you can take trades just on one time frame. It's not like it's impossible. You can do that. But by using multiple time frames, obviously you're going to have more advantage in timing. You can get more precise entries, tighter stops, meaning your risk or your reward in terms of your expressed as the units of risk that you're taking, or the distance, the ratio of those two things will be much more favorable if you can use at least 2 time frames to match things up. Okay, so from the daily, the weekly, we don't have a reason, right? We walk back to the weekly, we don't have a reason to do anything yet. We want to go long from this structure. We're not there yet, so there's nothing to do. Okay, on the daily time frame, we do have an order block where we want to go long. Remember what we talked about, we want to go long there. But when we go one step lower to get a second time frame telling us the same thing, when we go deeper and we look at this, what we see is that the market actually created a bearish H4 order block and hasn't been able to close above it, meaning invalidating it. Meaning, why would you want to be going long from this area, right? Or where we are currently at? There is no indication, at least in this time frame, that the buyers have come in yet. Okay, so there is no alignment. It means that bigger time frame, that daily time frame that you want to be, that trade you want to be taking, it's not aligned with the H4. So it's, there's no alignment, no trade. However, if you look at the H4 and you think, okay, maybe there's not a long, but maybe there's a short here, a lower time frame short, meaning just the H4, but you still have to have some kind of alignment, some confluence on other time frames, maybe the 15-minute, maybe the hourly, maybe the 2-hourly. Although the 2-hourly is quite quick, quite next to the H4, but it depends on, what the type of Fabian, yes, or Fabian. This is exactly right. It's very simple. It's very, very simple. Just using and blending, marrying different time frame, not randomly. You got to have a system to it. Okay. In my case, but it's not truth. It's not a universal truth. In my case, I need something that is 4 times bigger, 4 or 5 times bigger, or 4 or 5 times smaller, right? That factor 4, 5 is the sweet spots for me. Meaning, if I have a daily setup or reason to go long or short, I want to have an H4, right? That's 6, but I mean, it's close enough. That's 6 times, but it's close enough I need to have an H4 reason as well. Okay, so and you can use this combination for any combination. Basically, it doesn't have to be the daily to begin with. Okay, but that's not true for some other people. They use the H4 and the 15, right? That's not a factor 4 or 5 or 6, right? That's what is it? That's 16, right? Difference between 15 and 4 hour, the ratio is 1 to 16. So, but how big of a ratio you use you'll have to test out in your, back testing in your strategy as you're building your system. But in my case, 4 is the sweet spot. 4, 5. So that means that I go from the monthly to the weekly. You have basically a little bit more than 4 weeks in a month. You go to the weekly, you have 5 days in a week. And you have on a H4, you have 6, of course, 6 candles, which is not 4 or 5, but it's very close, good enough. And then you can go to the hourly and then so on. Okay. So when we go to the H4, we don't see that the H4 is lining up with a daily expectation we have, at least not yet. So that tells me that the trade isn't ready. It may never come, be ready, but maybe we have something on the H4. And actually we do. If we go lower time frame, let's check the chat for we have anything else. If I'm missing any comments, perhaps. Looks like a short row. Yes, Omer, that's exactly right. Fabian says looks like a long. Well, sure. I don't want to, tell you it's not the wrong or right answer. Maybe you have reasons to think that this is long, reasons that I don't see. But there is some bullishness. There's one order block created on the lower time frame. It hasn't negated this structure yet. So to me, in any case, it looks like it's still a short to me. But it, don't want to say it's not about being right or wrong, but it's about what the market is telling you. I mean, individually you. All right, so we have the H4. If we go to lower time frames, what do we see? I don't see anything here. There is a little order block here, and it is still fresh. Let me just look at it. But that wick right here tells me that order block isn't exactly what's stopping price from going higher. And if we go to the H1, we can see that there is actually, this is a much better order block because it is at the extreme of that swing high, right? And we went away from it. It's not fresh as we indicated. However, you can see that we have a little quasi here, right? For those who are unfamiliar, you have a little uptrend move. See that? Breaks the neckline and it comes back. Where does it come? It comes to the last order block there. And the next question I have is, how does the market behave after coming back to this entry order block of the quasi? Any ideas? Easy question. Prince Luca says, to be on the safer side, I'll wait for the shift in minor structure. Okay. Not sure if you're looking for the shift short or maybe long. Bearish Maria, good. Well done. Yes, the market tells us it's as simple as that, right? We tend to complicate things a lot. Look at the candles after it reaches that order block again, right? For the second, it creates it the first time. These two candles created it. We have an immediate retest here. That's not the first retest. It goes away and comes back. And look at how it reacts to this candle. You can see it leaves it's a bullish bar with somewhat of a nice big wick, but not too much. And in the second bar, you can see that it flipped, or it was engulfed by this following candle, meaning it created a bearish candle, telling us that the sellers have taken control again. Okay, so and that coincides, or that rhymes with the fact that we have a supply area here. So this is the next trouble area, the very next one. Not assuming that it's going to continue much lower, but price. This is on the H1. Let's see on the H2. H2 is even lower. The H4 we don't have anything. Okay, so this is the first area that price is going to, at least is likely. We don't know the future. Not that I know what's going to happen necessarily all the time, but this is the first area where we're gonna be. If you get in And that's already with everything that I explained. I don't have to. It becomes obvious. It becomes evident that you could be waiting for these order blocks to be retested, for price then maybe on the lower time frame to shift lower, shift bearish, and then get your entry. And you're just looking for the next level. The next level in this case is not a lot, is depending on where you enter, of course, but let's assume you enter very close to that order block, not on those wick, which is much more difficult. You're talking about roughly perhaps 20, maybe a little more than that, 20 pips. So that's I think that's the stand, or that's the status of the market, of price action. As long as we don't take out this order block, I would assume that the most likely place direction we're going to be going is at least to that order block, and probably even past that and move a little bit lower. Who knows? We can look at the daily to see if what else can we expect. We do see that there, remember on the daily time frame, this is a demand zone, so it's not something, it's not likely necessarily that this is going to happen. So you have to manage your expectation. Yes, the H4 is still bearish. The order flow is bearish on the H4, but that doesn't mean it's going to go through bigger. Actually, it means it's unlikely to break the daily just because of the hierarchy of the time frames. Okay, so that's that's EU. And if we go lower time frames, I can actually tell you where the entry. Let me get this out of the way. So this is the same setup, and on the 5 minute we have, let's mark this. I think it was on the 2 minute. Yes. All right, so look at this. You have the quasi on the 2 minute. The same thing, right? I'm just applying the same simple ideas. You have the uptrend, the established uptrend. You can it'll be this and that, right? That doesn't look like an uptrend. All right, so you have this. This could be the neckline. In my case, my neckline is right there. It's a smaller established uptrend, but nonetheless, it is an uptrend. Look at that. This is the smallest uptrend. Before that high, we break that neckline, and price comes back to retest that order block, and that's exactly the entry, right? That's the entry. I remember I said you could have taken an entry around this area, but you could, in theory, you could be within that order block. Imagine that, having your stop above here, maybe a couple of more pips just to be on the safe side, getting in the market, right at that moment when the market shifts in direction, and there you are. Okay, all right, so let's look at what's a quasi. Beat asks, what's with the mask? VD. A lot of good questions, guys. What's the target for sellers? Well, it depends on what time frame you got your signal. What structures are you looking for? And to me personally, this would be at the first area where I'm gonna get some profits off. Right, my first TP is on that the first trouble area, right? The FTA. But there is a case to be made that you could possibly look. Well, actually, it's a demand area in the daily, so you got to be careful with that. But you could easily, if you keep on finding, for example, right? If you not on the H2, but maybe on the H1, whenever price gets to the FTA, which is this structure, you can start reading the market and see if there is a shift. If there is a shift, then just take your profit and walk away and be happy with it. But if there isn't a shift, it's 1 plus 1. It means that it's likely to continue, right? It needs a shift back to go to a bullish order flow. As long as it's holding that bearishness and keep on creating bearish structures and not bullish, you could hold this for a lower target because it hasn't done a lot of. The range of today is on EU is only 50, and the ATR is about around 85, meaning that there is possibly another push of another maybe 30 pips, maybe 25 pips or so below today's low, which means this is today's low and we're measuring about 25, 30 pips below this. It brings you to that line, which is the weekly, yes, that's the weekly line that we have been talking about, right? Where price gravitates, a lot of time comes back and it squeezes, it goes through it, but it keeps on doing that very, not surprisingly, quite frequently. Okay, so that could be, you could, I mean, if you're active in the market and you're looking at the chart, you could delay your exit and just waiting for price to, as long as it's not shifting, hold it for longer. But if you're to be on the safe side, I would just take it out here because it's, you know, it's your best place to get out of the market. You're not even expecting, you're making it very, very easy for the market to hit your TP. You're not expecting, you know, a breakdown of that level and a continuation, which, you know, is less likely, although still quite likely if you look at the market structure. But the fact, the market, the price getting to your level needs to be something relatively easy, right? You want to be, if you want to have a good win rate, and that is relative, right? 40 is good for me. For other people, it's not good. But if you want to make your TP to be something relatively easy to be hit, okay? If you're putting it all into extreme, something that's unlikely to happen, obviously your win rate will suffer quite a bit. So I would recommend having your TP based on that H1 order block. And if it keeps on going, you know, be content with your profit and don't worry about anything. You're always going to be leaving money on the table. Almost always. All right. The mask. The mask is part of my online persona. So I come with a mask. There's not a Victor without the mask. Let's see. We have quasi. Sure, quasi. What is a quasi? For those, I hope I do explain this quite often, but it is, since we keep on growing, I understand that there are people who have not, you know, known the way I trade, haven't seen that before. So we have very shortly, see if I can say it in maybe 1 minute or so, you have a quasi is short for Quasimodo, which is a reversal pattern, which is actually a variant of the head and shoulder. Okay, so you have the head and shoulder, which is this, a very textbook indication. Very typically, it's considered it is shown as very symmetrical. Doesn't always have to be symmetrical, but it's typically very symmetrical. You want to see some kind of symmetry in it, either in the height of the shoulders. This is the head, of course. The height of the shoulders, the two tops, lower tops, or the base or the base of those shoulders as well, right? And it's a way of market telling us that it's changing direction, right? A reversal pattern. And the Quasimodo is exactly that, but it's especially not symmetrical, right? So you can have something like this, and it would be that would be a Quasimodo, depending on the exact definition. But this is a Quasimodo where you have it doesn't look symmetrical, but it still has a head and two shoulders, right? So and that's what I use for my. Actually, let me indicate that's what I use for my entries, for my setups. You have a neckline where it breaks it. That's the break of this uptrend, right? The break of structure. And I wait for, if it does something like this, you know, you could say it's still a quasi. This is the right shoulder, but I wouldn't trade that. Okay, I would. What I do is I measure from the head, to wherever it reached before starting the retrace, and it needs to go at least 50% of that distance. It means that above here, I start considering something that I can trade. And but I mean, you could argue, you know, there's no one stopping you. This is also a quasi. There's no one stopping you of trading it. Actually, there's not a wrong way of trading that quasi. It just you just need to know what your what your probabilities are, and test it out. And if you see profitability, then who am I to tell you not to trade it? I'll tell you, trade it if you have all the data, supporting your using that quasi that way. All right, so that's the quasi, short for Quasimodo. All right, let's see if we have any other question here. Someone asking Woodok Dibasu asking, how long have you been trading? I've been trading 8 years now, close to 8 years, very close, full time. But I've been trading before that, on off. So I would say 8, the period before. I don't really count. All right, so that is EU. Okay, all right, so let's look at the at gold. You guys been trading gold today? Chandra, you're asking me if I trade the smart money concept or ICT or any other. I don't think I do, because I haven't taken any courses specifically known to be as smart money concept, or I haven't, I know who ICT is, and I know he has, a lot of following, but I haven't followed his courses, and I don't think I'm using anything he does, because I've never been a student of him. So I would say no, but of course, maybe you will find some resemblance in things that I use, but I build what I'm using. I build it myself. It's not using very complex things in the market. Order blocks and quasi, multi-time frame analysis, top down, and that's it. And a lot of data until I found what works, and I build a trade plan around it, without using anyone's course or anyone's idea. And yeah, that's it. All right, so Louise is short gold. Someone Soar asking about gold, of course, and Juan Camilo. How are you doing, Juan Camilo? All right, I hope you're doing tranquilo. Let's look at gold. Let's look at gold. We can take a look at the Bitcoin as well. Okay, so taking these off, let's look at the. Actually, yesterday we had a little trade we were talking about in our workshop, which was this trade. We were using the same. I only use this. Well, I have multiple strategies, of course, but this is my main strategy: order blocks and quasi. And for those who here was in our workshop on Discord, raise your hands if you were in our workshop. Yesterday we talked about this, and it was an entry long on gold that hit TP. About how much did it take? That was about 1 hour, a little less than 2 hours, but it depends. That's the top of the structure. You could have put it at the very top. This is the neckline, but actually price went quite higher, so you could have held it even higher. And this is something I indicated this could be an opportunity, depending on your trigger, of course, when it hits those structures. So you can see Harish was in our workshop, and so we talk about this quite often. I see we have someone in the background. Let us know if you, whenever you're ready. Don't feel pressured to start. There's no there's no pressure. Just let me know whenever you're ready. We have Josh in the background. Josh is one of our new hosts for our YouTube channel. So we're gonna get to know Josh in a little while. I'm eager to know Josh. I'm sure you guys are as well. Chandra asks, all right, perfect. So we have Chandra asking, how do you align time frames? That's a good question. I think it's mastering multi-time frame analysis and alignment already gives you a great edge, in my opinion. It's simple. It's very simple, in my opinion. If everyone who knows how to do it will tell you it's very simple. However, to do it right is you have to back things up with your data. As I was saying, the factor 4 or 5 may be adequate for me, but it may not be adequate for you. So you have to, find your sweet spot for your own pair. Before we continue with gold, let's look at that example. Let's look at the. All right. Hello. Great stuff. Let's look at the at EU for the example. How to align different time frames, right? So you have the daily time frame. So let's go to present time. Okay, so you have what you're looking for is a reason to either go long or short. The same way we were talking at the beginning, right? We started the top-down analysis on the monthly. We didn't have a reason to do anything. We could analyze and say, you want to be buying long, you want to be in long, you want to have a long position, long exposure, but there's no entry, there's no setup, there's no way you can, define your risk precisely. So there is no setup, nothing to do, nothing actionable. On the weekly time frame, because of this order block that was created, that could be, like it is in my case, that is one reason for in this time frame to go long, but only when price comes back to it. Okay, so the way to align the time frame is to, whenever you have a signal, either to go long or short, you have to define where, right, the price level is relevant. Where is that area that time frame is telling you to go long? Where is that buying pressure? In this case, it is this whole order block, right? And you actually have to know where does it invalidate, what needs to happen for that alignment to be broken. Okay, but once you have this, you can say, okay, well, from the weekly time frame, I want to be going long whenever price comes into this order block, right? This order block here. So you go down a time frame, and how much more down depends on what I was talking about, the factors. If it's 4x or maybe 10x or 16x, that's up to you to find out with your strategy. But you go down on the next step in your time frame sequence, and you're looking not at that weekly order block for a reason, but you're looking for the new time frame, right? The smaller time frame, in this case, the daily. Once you have, and you see where do they two overlap, okay? Up here, we don't have overlap because the order block on the weekly is lower, but we do here. So if price comes in this order block, if and when, we don't know if it will, but if it gets there, that is alignment, because you have 2 time frames telling you that this is a good place where possibly price could bounce from, right? And that's it. The only and what you could do, you could use only 2 alignment, right? Only 2 time frame for your alignment. However, you can be as ambitious or as precise as you want. What I do, I go all the way from the 4 hour, and sometimes I use the daily and the weekly as well. For the 4 hours, I go all the way to the minutes, and I try to find the alignment when the 1 minute aligns with everything else, and everything is still aligned. So the 4 hour, the hourly, in maybe the 2 hours as well, all of them are aligned. We get that's where I get my entry. And the good thing is that as long as you have the alignment is still unbroken, you can keep holding that trade for the TP. Okay, and you need to, there's more nuance to it, but that's basically how you align it, right? So you look for 2 relevant, in a relevant sequence, 2 time frame telling you to either buy or sell from the same area. All right, let's go back to gold. I see Pedro in the background. Whenever you're ready, Pedro, just let me know.
There you go.
And this is the Pedro from our Portuguese community. Bom dia, Pedro.
Good afternoon, everyone. Bom dia.
How do you say how you're doing in Portuguese?
Como estás?
Como estás? Okay, all right.
Goodbye.
I'll train that.
I noticed that you were talking about your favorite topic, so I let you just speak a little bit longer until we finished. Beautiful Quasimodos.
Yes, no problem at all. We had a little entry yesterday. Not a signal. We don't give out signals, but a little entry we had right where we were in the workshop, and it worked out quite nicely. I didn't to be honest, I didn't take it because this is it's gold. It was outside of my trading period, but it was a very nice signal nonetheless.
Okay.
All right.
On the background, we also have Josh with us, so I'm going to maybe bring Josh into here.
Yes, please do.
Yeah. Hi, Josh. How are you? Welcome.
Hi guys, how are we doing? This is really exciting. I'm really looking forward to this. How's everyone doing?
Yeah, we're good.
We're fine.
I think there's a little bit of echo on your background. I'm not really sure. Maybe it was just on my side. Maybe if you could adjust the volume.
Are we still all right? Are we all right? Or do I need to edit my audio settings?
I think it's okay. Yeah, we are all good. So joining with everyone. Good afternoon, everyone. Hi, Kostadina, Harash, Fabian. Oh,
what's up, guys?
Here we go.
What's going?
Listen, how you doing?
Can you guys hear me?
Yes, we can.
Nice. All right. So, everyone, this is Josh. I was just wanted to jump in here and tell you guys that we got Josh in here, and he's going to be a new guest, and a new host here is going to be, doing these regular appearances here on the live trading room. And the good news, you're a scalper, right? So you're going to get a lot of action here. You're going to get into the, some active trading, because everyone's like, we do a lot of analysis here, and people are, people say, analysis is good, but we need some action, and that's why we brought you in here to.
Yeah, it seems like I bring something a little bit different to the party, and it's gonna be really exciting to see how I can showcase my skills and potentially help everyone in the community. I'm really looking forward to it. I bring a slightly different trading approach, and let's see how we go.
Awesome. And you have you have together with Pedro, you got a trading community, and if you guys are interested in checking out the community, make trading work, you can go into the description of this video. There's links, and so if you're interested, if you like what Josh is doing here and you want to learn more about him and more about the team, you can go into the description and check that out. I'm gonna have to jump out, and I'll be in the background here. If you guys need anything, just let me know.
Cool.
Beautiful. Thank you, Jonatan.
All right. Take care.
Thank you for the welcome message. Have fun.
So Josh,
Sorry?
you are new. Welcome to the team. I'm
Thank you.
glad to be welcoming you. Go ahead.
Yeah, I'm really looking forward to it. I've been watching the stream over the last few days to sort of learn the dynamic of everyone and learn everyone's different skill set. Yeah, a little bit about myself. I primarily trade NASDAQ. I've stuck to one asset and just made sure to focus all my attention into it. I'm a scalper, as already been mentioned. And yeah, I trade New York Open. I'm looking for, a few trades, wick tests primarily, bounce off VWAP, just support and resistance levels that have got a high probability. And I'm only looking for, say, 10, 15 points on a trade. So my risk is very much positioned in a way where I can be in and out of trades pretty quickly. I'm not really one for holding positions for a long time. In the early stages of my trading, I did a bit more swing trading, but now I'm very much focused on scalping, sort of 5-minute, 15-minute time frame. Yeah, so that's my strategy in a nutshell. But I'm sure you'll learn a bit more about it as I'm on here.
Awesome. You answered quite a few questions I would have to you already. So tell everyone who is watching you right now, who is Josh? What is your experience? So how did you come to the market? What is it that makes you a trader?
Yeah, so I came into the market very young, actually. I came into the market when I was 13, 14, following a family of traders who had either traded in the city in London or they were actually retail traders. So my route into the markets was very different to a lot of traditional traders, where I had that hands-on experience in the markets rather than watching sort of educational content. I really got that first-hand live trading experience, which was massively beneficial to my career. And yeah, since then, I used to trade a bit of DAX, but my focus has moved into NASDAQ. NASDAQ is, for me, from a scalping perspective, it's a much easier market to trade in terms of volatility. And the session suits me better with New York rather than London Open. So yeah, that's that.
Awesome. So you've been, you do, I mean, it's evident you do look very young, but you're already you have left your marks in the trading world already. You have some years of experience behind you. Why are you a scalper? You mentioned you are a scalper. Why? What is it that why did you choose to become a scalper?
I like the fact that I can be in and out of trades quickly. I used to swing trade or hold trades potentially over a few days, and I never liked going into market close in positions and then coming into the market open with that unfamiliarity and the uncertainty of being in a position. So I sort of went from one extreme to the other and went to scalping because I just like that fast pace, quick decision making. It keeps you mentally alert and it just suits my personality. I think you've got to find a strategy that really suits the way you operate as a person, not only as a trader. And for me, scalping is one of those things where I can be very precise with my executions. I don't have to think of a lot of different factors in the market. I can purely look at a small portion, a small time frame of the chart and make an assumption on 10, 15 points of price movement, which in the NASDAQ, as we know, can happen in a matter of seconds. So it's really a fast-paced environment, which I thrive in.
Strive. We will get to that. We surely will get to that. Definitely. I know everyone is watching, thinking, I want to see the scalper. I want to see the quick pace, the fast-paced movement in the markets. We'll get to that. But before that, let's continue digging into who is Josh. So you're a scalper, Josh. You are a you've come to become a scalper because you didn't like having or holding your position through the close. You think, and don't we all have seen that, where the next day the market is completely different and everything you held as true from previous day no longer gives you any value, meaning why are you still in the market, right? We all have seen that, how the market changed from one day to another. And I completely understand why you don't want to hold overnight. So how do you, you said you trade mostly NASDAQ?
Yeah.
Yeah. Do you trade it through CFDs or Forex? I mean,
I trade
futures.
through. Yeah, so I did trade a lot of CFDs, and I still have CFDs because I'm in the UK, so I still do have CFD brokerages, but I'm also trading futures as well. Primarily, I'm scalping the futures market. Yeah, I just enjoy it. So yeah, NASDAQ has been my sole focus. Yeah, over the last couple of years now.
Awesome. And what is you said about your your trade could be 15 minutes. What is your typical holding duration when you're trading?
So I think my data shows that the trades that I'm taking, my average position time is 45 seconds or something. So it's a really short period of time.
Wow.
Because with a wick test, you get an instant price rejection. You know, with a really clean wick test, you can really understand whether you're right or wrong on that trade. And if I keep the risk and the target on that trade the same throughout, 100 trades that I take, I know what to expect from entering that trade. The difficult thing with scalping is making sure that you're patient for that setup, because yes, you can hear that I can be in a trade for 45 seconds, although you have to make sure that those trades are as accurate as possible so that you're not getting into the wrong entries and re-entering multiple times. And, for me, it's about taking, I don't usually tend to take more than 3 to 5 trades in a day. So it's really important for me that, throughout that session, I'm taking the highest quality setups possible, because with scalping, I always know that there will be another opportunity in the market. So if it means sitting on my hands for, an hour into the open, I'm fine with doing that.
Awesome. And what can you tell us about your risk management? How you think about risk? How do you manage your risk? You have any formula or anything you can tell us?
With scalping, it's fairly difficult because it's very much sort of, you can't have a set 1 to 2 all the time. It's not always the case. For me, my target is usually a 1-to-1, because with my scalping strategy, my win rate is typically a lot higher than a lot of other strategies. So I work on the basis that over a larger sample size, if I keep my risk at a 1-to-1, if I win 7 or 8 trades out of 10, I'm confident that I can keep that, and that's a consistent thing for me. But my risk is usually I'm looking for the prior low of the previous candle potentially, or a point of invalidation where if I'm looking at a higher time frame for a potential strong area of resistance, I'll look at that chart and say, okay, if we're getting past this point, it becomes an invalidation. I'm best off leaving this trade as it is and then waiting to get a potential rejection or another entry point in that similar level.
Awesome. So and assume you're using multiple time frames for your analysis.
Yeah. So I execute pretty much based off the 5-minute chart, but I'm also looking at the 1-minute chart just because it gives me an idea of short-term trend within that move. I use the 15-minute as well, just for a bit of added confirmation. But when if I go into the session and I'm looking at some key points in the market, sometimes I do look at the 4-hour, because the 4-hour can be a really indicative chart to show strong support and resistance levels. It's really good for me. It's basically what I grew up looking at, because the 4-hour chart shows a lot about the market, and obviously the daily as well. But I typically, when I'm sat at the charts during market open, I'm trading the 5 minutes and using the 1 minute and 15-minute as added confirmation for that trade.
Awesome. For everyone watching, if you want to get to know Josh, this is your moment. This is the moment to ask all these good questions like this one. Yeah. Are you a gamer? Mm-hmm. And does gaming help you to become a better scalper?
I used to be. I used to do live stream videos of doing games, actually. So I'm fairly versed in live streaming, but no, the businesses take up too much time now. I don't have too much time for games anymore. But I think from a mental alertness perspective, I think it can definitely help you, because you're always on your toes, you're always mentally focused, and that's what you need in scalping. So I think, a lot of games can help you with that.
Yeah, awesome. I like that. Pedro, are you a gamer? I've never asked you that.
Yeah, I'm listening to everything that you are saying. I used to play CS. First of all, when I was younger, I used to play FIFA, okay, or Pro Evolution. So that would be my main game. But then as you grow up a little bit, I start playing a bit more of CSGO with some friends. And even though it can take a lot of our time, I think there is actually that benefit of being aggressive, being focused, and being alert constantly. So especially myself, as I'm a little bit of a kind of conservative person, or waiting for price to get to me before I take a trade. So even when I was playing CSGO as well, I was more of the strategist and not exactly the guy that just goes and rush and starts killing everyone. So I was a bit more of the, okay, let's see if someone's come here, let me play on the right spot, let me move, let me check right and left and right to see if anyone comes. But sometimes that aggressiveness actually can help. And I think I either heard something or I read an article, even Elon Musk or something like that. I think people, or doctors that actually play video games in their life, I think they are, especially surgeons, I think they actually have a higher success rate in terms of what they're doing, comparing with people that are not playing video games. Okay, so I'm not just here recommending every doctor now to start playing video games, but I think that's a stat that is out there, of the benefits of playing video games.
Yeah, gaming is you're absolutely right. It's good for your motor skills, and it's with being quick with your fingers as well. So yes, it's true. I don't know, in trading you do need that, but being quick and being able to make quick decisions for sure is something Josh will confirm is something you need to be able to do to be profitable as a scalper in any case. But depending on how you trade, like I wouldn't consider myself scalper, but I do need to be able to do quick decisions even while not being a scalper. So it's very helpful and as a trader in general, I would say. Josh, what kind of, one follow-up question? What you mentioned a couple of games. I think I heard a couple of games you mentioned. What type of games are they? Are they like strategizing game or shooting games, or
so
what kind of?
Yeah, so one of the games I used to play quite a lot. Well, I used to play Fortnite, which is, as everyone will know, first-person shooter. That's quite a reaction-based game. It's quite an intense game. But another one, which no one's mentioned, Formula One. I had a racing sim, which I used for Formula One. And Formula One, the game, I can only imagine what it's like in real life, but it's one of those games where your reactions need to be on point. You need to always be alert. Because when you're in a race, it's that constant mental focus that you need. And that is very much the same with trading. So yeah, that's one of the games that's up there for me. Pedro, I don't know what FIFA you were playing. It was probably one, not to make you feel old, but it's probably one that was out before I was born. So I remember I used to play FIFA 18. And I think that was about the earliest that I got.
But I used to play, back in the days, Pro Evolution was even better than FIFA. So just to imagine, like I don't know, 2007, 2008, something like that. Yeah, those teams back in the day. But yeah, now FIFA is better. I haven't played FIFA for a long time. Maybe one day we can do out a FIFA tournament. I still going to bet that I can win you guys. Just need a bit of practice.
Fighting talk.
I still bet I can win. Okay.
Is that a challenge? Are you challenging us?
Anyone from the hosts, from the audience, I can get into that competition. I just need practice just with the controller. As soon as that done, I can challenge anyone.
Can we make sure we get this recorded? Can we make sure we use this as evidence for future reference? We
will surely do so, Josh. Awesome for all of that. We are happy to have you as a scalper of a new trader, and I'm very curious to see how you break down the market. How you look at, for example, I don't know, maybe you can take us to either a trade you took last time, or one of your trades, or maybe current price action in NASDAQ, as that is the one you trade, and tell us what are you looking for, why would you be trading there, and what are you targeting then? And actually, I think you said 1-to-1, right?
Yeah.
So you're not actually targeting anything. You're just doing the multiple of your stop.
I mean, it's based on the risk. It's based on the risk of each individual trade, because with scalping, obviously, we've seen a fluctuation in market volatility over the last few weeks, which means that if the opportunity's there, I may open it up. But typically, as a rough guide, I stick to 10-15 point target on my trades. It's a good way of staying consistent for traders, because I try and go into the session without a bias per se of a direction, and it's more about some key levels that I'm that I'm interested in, because I like to stay very open-minded going into the session so that I'm looking at all the available opportunities in the market. But yeah, there's a few areas that I can go over in terms of what I'm looking for.
Yeah, just 1 second. Josh, I think if you can share your monitor so we can kind of bring it over so everyone can look at it. Yeah, so I will do that.
Yeah, it makes a lot of sense to be open-minded as a scalper, because as a scalper, you don't need a lot of distance to reach your target. It means also that there could be a lot of opportunities buying and selling, regardless of where the market is the trend is going, right? If it's overextended, you can fade it. If it's getting back to some demand area, and you can go with the prevailing trend. So it makes sense. It makes sense not to just limit yourself to one side if you're only going for a couple of, a short distance.
Yeah. Okay. Well, what I'll do is I'll bring up my chart. My charts are pretty much blank at the moment, so it gives me a good canvas to sort of showcase. This is my first time presenting this, so let me.
That's fine. Take your time, Josh. In the meantime, Pedro, how has been? Have you been able to catch any trades today?
No, not today. So again, that movement yesterday on the pound and the euro basically reached a target that I was looking for all the way to those lows. I think today there was maybe that opportunity. I don't know if you catch it or not. Did you catch that sale today?
Yeah, not yes, today too, and the one you mentioned as well yesterday from EU and GU as well. So both of them.
Go ahead. Sorry.
No. Both of them, and actually I sent you on WhatsApp yesterday when we had that move. I think also last week, questioning, asking you if you were able to catch it as well, because we're looking at similar structure. So it's nice to be to have a trader that looking for the similar thing.
Exactly. We've been waiting for that potential short on the pound. It's working. I think this can be the top for now. We'll see. But I think this can be what the yesterday and on Monday. I think maybe it can be the top for now on the pound. So actually one trade that I'm trying to look at it now is the euro pound. I'm trying to look at the euro pound to see if there is the opportunity to go long. So I've been waiting also for this one for quite a while. It's a little bit tricky just in terms of where price may be reacting at the lows. Okay, we are within that bigger range, so we could find some buying pressure in here. I'm just not 100% sure if this is already the low or price wants to go a little bit lower before that move. But one of the moves that I'm looking for is basically to fill this range. Okay, the drawing is in there. So it's basic. Now that you managed to break this level, just right now, literally, in here can still be a little bit of a reaction. But I think one of the moves that I'm going to be looking for is basically to do exactly the same movement that we did in here. Basically, in terms of symmetry, I'm looking for price to eventually fill this price as well towards this level. It can even go higher, but for now, that's the only thing that I'm looking for in here. I think I'm going to try to look for this type of a move, which can lead into more bearishness as well on the pound dollar, for example, which could be interesting. But I think euro pound can be close to make this move, and that's one of the trades I'm looking for. Aside from the US indices, which I still need to analyze a little bit, but you can give that space to Josh to see what he's looking for on NASDAQ for today.
Let me share my screen. That's probably me. So hopefully this is all right. Right.
Yeah, still waiting a little bit.
I need to just enable the settings quickly. 2 seconds. Okay, this should work.
That's good.
Right, right, am I sharing?
You are now. 1 second.
Not yet? Oh, yes, you are.
Yeah, you are now.
Okay, so obviously fairly basic here. I've not got a huge amount marked out. Obviously Monday we had the holiday. Markets were open, obviously early close, but the exchange was shut, which meant we got some pretty choppy price action. It was tough to trade. Yesterday, I think, was a bit of a continuation of that. So it was very difficult to find an entry. I didn't end up trading at all yesterday. But today we've seen a pretty decent push. This is the 4-hour chart here. We've seen a pretty decent push up so far, going for these highs at 488. This is the CFD chart. So I think the futures price is about 55 points higher. I was originally looking to see if we'd come down to around the 305 level. This is a nice area for me because it's the continuation of the trend. This is the 4 hour, so I'm looking, this is a heavy point of support. So I'd then be looking at, okay, where does that entry look on the chart around this area? So I would have marked that out as a potential area for us to reject. And then I would use the 5-minute chart and the 15-minute and the 1 minute as that sort of, okay, around this level, let's see what happens. Obviously, we didn't get that. We only ran down to 346, and then we've absolutely pushed, which is good because it shows, I think, that we're going to get some decent volatility going into this session. For me, I'm looking for a run of these highs, which it looks like we could get before 2:30 open UK time. But for me, I'm waiting for that. Another area that I've potentially marked out, if we do get a rejection, the sort of 405 level, potentially this wick here, where it would still be a continuation of trend. So I'd be looking somewhere around this level. But for me, like I say, I keep very open-minded. I've just marked out a couple of areas. Obviously, these highs here, I'm interested in seeing what happens when we get up to them. See, we've rejected now a couple of times. I would have thought that we continue this move and push through it, but I'm very much waiting for these two scenarios to play out. So we're either getting a 20-point push into the highs, or we're dropping sort of 60 points back into this area where I would be interested in taking along, which we may see today, but it's dependent on what we do. Because this seems like a strong point, but we'll see how the 5-minute chart's shaping up. But for me, that's a couple of areas that I'm looking at. We're seeing some decent volatility already. I don't typically look at the markets before 2:30. I used to do a lot of it because I was trading slightly differently. But like I say, I want to come into the market open with a very clear mindset, very clear on exactly where I'm looking. And yeah, let's see what we get. We may see some trades taken on my end today if we come into these areas, which I think there's a possibility we will. For me personally, I'd like to see us get this area, the 400s, before pushing. But let's see how much strength we get. We've had a decent rally up thus far. So yeah, it's gonna be interesting to see. But it's a waiting game for me now. What are we? It's 1:30. So 1:30, we might get some movement. Obviously, as everyone will know, it's FOMC day today, which means the way I typically approach FOMC is take your trades and get out, because the market it's all about anticipation. So I treat FOMC days fairly differently. I want to be in trades, out of them, take the risk off the table and move forwards. So yeah, has anyone got any questions on that?
Awesome. Yes, I while the chat is open for any questions, I have a couple. I see there you have a trend line, and I see two horizontal lines. Are these typical things you use in your trading setup, or are they part of a trade plan?
Really, I'm just marking these out to show that there is the continuation. I've just marked them out as sort of key levels for me of where I'm interested. I don't typically do a lot of chart marking before my trades, because when I'm scalping, it's become like instinctive now as to what I'm looking for. I don't need to do a lot of marking out, because with scalping, you've got to be ready to take the trade. You've got to take the trade based on the information you've got in the moment. And yeah, that for me is, I don't need to do a lot of marking out, because I know what I'm looking for. I've taken, a lot of trades where I understand now, I've got a very clear understanding of what I'm looking for. But no, I purely mark those out just to sort of visualize slightly to the audience the sort of areas that I'm looking for, that we could see some potential resistance. Obviously, as we get closer to these areas, once the markets open at 2:30 when I trade, I will see. In my strategy, the window between 2:30 and 2:45 UK time, so 15 minutes into open, I'm very much waiting to see what we get, to see what moves get cleared. I won't take any trades in between that time, because I like to see the market sort of open up a bit, let that move happen, that initial big move that we typically see at 2:30. I want to let that play out, and then we go from there, because it just helps me adjust to trading. I don't want to be at 2:30 looking for trades instantly in and get stopped out on a trade instantly because the volatility is too high. I'd rather wait and realign my thoughts with the market, understand what we've done, because at the end of the day, if we get, if we had the drop to say 403 at 2:30, the trade for me is invalidated. Yes, it may still play out, but the risk of the volatility during that first candle is too high for me to even want to take the trade. And it sort of comes back to what I'm saying about with scalping, there's always another opportunity. And for me, I'm going to wait for that opportunity. So yeah, that's that.
Nice. And the levels, the horizontal levels, what is it?
Yeah.
How do you know where exactly to put the level? Because what are you using? Are you using a number of touches? Are you using only the wicks? Can you use the bodies as well? Are you?
Yeah. So
does it have?
Yeah.
Go ahead.
So primarily, I'm using the wicks. I'm using a clear wick. Some wicks are not as strong as others. Again, it's sort of hard to explain for me because I'm just instinctively knowing. But I'm looking here and I'm going, okay, does this follow the trend? Usually what I've found is that if we get 4 tests of a trend, we typically break it. That's a general rule based on what I've experienced over the last few years. But this for me is aligned with what I'm looking for in a trade because it's following the trend. And like I say, I want to see us get the 400 levels before we get the push up into 500 here. Because if we make the highs and then come back down, for me it's a bit of a it hasn't quite played out exactly how I want it to, and I'd rather see that move lower first, because at least it gives me the confidence that we're still following trend. And I think there's a magnet. I typically call it a magnet to the highs. It's like prices wanting to push there. It looks like a natural path for the markets to push to. So really, I'm looking for a trade that, okay, although it's a scalp, I can be right on counter trend or following the trend. I'd still rather take a trend, with the trend trade rather than a counter trend, even when I'm scalping. For me, that's just mentally, I'd feel better for doing it.
Another thing, we see that you trade, they're relatively naked. Do you use any indicators?
The charts are naked, just to mention it.
Just to clarify,
yeah, just to clarify.
Pedro, I don't think anyone here thought we meant anything else. But thank you for that clarification.
So from what I've seen from you, Victor, especially, I've seen that your charts are a lot more detailed than mine. Again, the reason that I'm keeping them fairly bare is because I don't want to add too many different variables in the market, because I don't need to. I've always learned, look, from my family in trading, keep it simple. Often traders overcomplicate things with too many indicators, too many bits of analysis, too many levels marked out, and they don't know what they're looking for. Everything looks like a trade. And for me, I'm like, if I just trust myself and trust the data behind my trading and keep the key levels simple, I don't need to use indicators. I used to use a lot of indicators. I used to use Bollinger Bands. I used to have everything, pivot points, the lot. And for me, I just like the clean aspect of going, I know what I'm looking for. I'm not adding any complications to my setup, and I can just watch the charts as they are. And then if I need to mark out some levels, I will. But generally speaking, I like to keep my charts as a clean slate, which means every day I'm going into the session very clear, open-minded, looking for all available opportunities.
Awesome. I like that. Great stuff. So maybe let's look at the chart to see if there's any question left.
Yeah, there's an interesting one in here. So what is your school of thought? Like, where did you learn trading from? I think that can be interesting.
Okay, so yeah, briefly touched over it, but my stepfather was a trader. He was a retail trader, actually. He got involved with the markets maybe 7.5 years ago. And he trades DAX, a bit of NASDAQ. He used to trade Wall Street as well. But he was very much retail trader, but he was intraday. So he was holding positions. Sometimes he hold positions for a long time, but generally speaking, he was holding trades for a few days. But I've got family that are involved in, well, I say it's not exactly relevant because the way of trading institutionally is very different to retail, as we know. But I've got a lot of family that trade in the city, but they're very different. It's a very different way of trading. But my route was always going to be financial in some respect. And I didn't really like the idea of going to work in the city, doing the long hours and the stress that they do. I like the retail approach of having the location freedom and the flexibility to trade. I like that.
Awesome.
So hopefully that answers your question.
Yes, yes, it does. It does. Where it tells us where you came from in terms of your trading background. So yes, it helps us place you a little bit in our perspective. Good. So do you trade anything? How long have you been trading NASDAQ? You mentioned DAX before. Do you trade anything else?
Yeah. So when I first started trading, I was trading DAX primarily, and then I sort of built up some confidence in my ability through DAX, which is typically a less volatile market. And I then moved into NASDAQ because I was ready to make a change. I just wanted to switch things up, put myself into a new market. So I was sort of hybrid trading those for maybe 6-7 months. And then about 2.5 years ago, 2 years ago, I decided just to focus primarily on NASDAQ. I completely understand, I know a lot of traders that trade different assets. Most people here will, but for me, I just keep it simple. That is the number one. If you haven't already guessed, that is the number one for me. Keep everything simple. And if I can focus on one market, it enables me to familiarize myself with it. So yeah, that's that.
Yeah, that makes it. That's a great question. I totally agree with that. You need to be. In my opinion as well, it's much better to be a specialist than to know a little bit of everything, but not really good at any specific thing. It's much better to specialize, focus on one, and maybe expand, but you don't even have to. A lot of the time, just focusing one could be just enough to be as profitable as you need to be, basically.
Yeah, no, absolutely. I'm not ruling out that in the future, I've got a long career in front of me, and who knows, I may change the way I trade. I may involve myself in different assets, but for now, I feel comfortable in the way I'm trading and it's working. And the good old saying, if it's not broken, don't fix it. For me, that is absolutely the case. I'm enjoying the way I'm trading. I think there's a good balance between what I like to call pressure and performance, understanding the market enough, understanding how I adapt in different market conditions. For me, being able to focus on one asset, knowing, okay, if the market's doing this, here's how I approach it. If it's doing this, it just gives me a very clear way of trading. And I think that's what a lot of traders should be doing, especially in their early stages. Focus on one market, get used to it, understand yourself as a trader, and then master that market and master your confidence and your ability to understand yourself and your edge in the market, understand your edge. And then the rest is history, really.
Yeah, that's totally. So it's in the early phases, basically you're learning the craft, and there's no need to be doing many things at once. Your goal should be, learn how to do one thing good before you go on to do other stuff. So that's I totally understand that. There's a question here. Do you trade the US 100 or the US 30? We see on your graph that your says US Tech 100.
Mm-hmm. Yeah, so that's the only market I'm trading, as aside from NASDAQ futures. So that's the fairly clear answer. I prefer trading US 100. Yes,
I understand. And the average number of trades in a day, I think you already mentioned something like 3 to 5. I think you mentioned.
Yeah. So in an ideal world, I'm taking 3 to 5 trades in a day. I found that that's the sweet spot for me, being confident that I'm taking a high quality setup of trade, because a lot of scalpers, you see them taking 50 trades in a day, and then when they analyze their results, they actually go, okay, I didn't need to take 30 of these because these were rush trades. Often scalpers, they'll get into a trade, they'll get out of it and then re-enter straight away with no clarity. And I think that's the sort of danger with scalping, is you've got to be very clear on the quality of setup, because every trade can look like a trade when you're a scalper on the lower time frame. So it's important to really be very selective with those positions. So 3 to 5 a day is my average. Sometimes a few more. Sometimes I take one trade and I'm done. But as an average 3 to 5, it's my sweet spot for making sure that I'm able to ensure that the quality of the setup is consistent across the board.
I understand that. Another question I have: do you trade with stop loss like in the market, or do you have a mental stop?
So I always have a stop loss, but I adjust it. I don't set the stop exactly where I would, because what I found with scalping is a lot of the places that you put your stop, it'll hit that stop and it will run back in the other direction. So I like to give myself a clear enough idea. I always have a stop as like okay, worst case, this is the maximum I'm willing to risk, because I don't want to be in a trade and all of a sudden it drops 100 points and I'm still in it because I didn't put a stop in. I like the peace of mind and the reassurance that I have a clear, defined risk, no matter what that will be, and I'll adjust my risk as I trade. But sometimes I will put a break even in. You know, if I am seeing a bit more potential in the market, say I expand the trade to 20 points, say, I will typically take my risk off the table there. If I'm confident in the trend of the trade, that for me is, yeah.
All right, so you do. You're not only going one-to-one as a scalper, but you're also upgrading your trades for if they fit the bigger time frame analysis.
Yeah.
So you hold your trades as well. How often do you hold your trades for a longer TP?
Well, I'm never holding my trades longer than maybe 5 or 10 minutes. As a like anomaly, like it doesn't happen very often. Maybe 1 out of 20 trades. But if I've got into a trade on a trending day where we're not getting many pullbacks, for me, I'd rather let the trade run a bit longer, take the risk off, than getting out of the trade knowing what potential it has ahead of it, and then kill it and then try and look for another entry that's not there. Because I've done that a few times where I've killed a trade at 10 points because I say that's my clear stop and my clear take profit there. And then I go, well, actually, what are the chances of me not finding another entry but still wanting to be a part of this move? So on those instances, I will open the trade up slightly more, but I'm not opening a trade up a huge amount because I still have to focus on that base hit, take the trade, be out of them, that scalping mindset. Otherwise, you just get caught up in never taking profit. And for me, I just like to be in the trade, out of the trade. And yeah, it's basics for me.
Awesome.
What about the other scenario where you are expecting the trade to evolve straight away, but it doesn't, kind of just range around your entry point? What are you doing there? Do you wait or do you kind of just get out of the trade because you don't see the movement?
It depends. I try to not trade ranges too much because I don't do well in ranges. But if I'm looking to expand the trade, my first call will always be to move it to break even. Because if I'm going to make that decision to expand the trade, I'm going to take my risk off the table. That sort of comes as the caveat to letting the trade run. But if I'm not seeing the move happen within the typical time frame that I'd expect the move to happen, I will just kill the trade, because I think a lot about, and recently I've put a lot of focus into emotional capital. So your mindset towards trading. If you're sat, I mean, like yesterday, it was quite difficult. Monday was difficult in terms of watching the market. In those conditions, for me, if I'm sat in a trade for too long and it's not doing anything, it's just eating away at that mental edge that I've got. And I'd rather just clear slate, leave it, come back the next day. That's the biggest thing that traders have got to realize, is it's the long term. It's long-term thinking. It might seem easy to go, yeah, I've got to make the money now, I've got to make it now. But actually focus on the 2-3 month guideline in front of you and go, okay, I've taken this trade now, it's not worked, but there's a potential 100 trade in front of me. You know, focus on the long term, and yeah, that's my approach.
Yeah, that's true. It's we tend to focus too much on this very trade in front of us, but in reality, it's that shouldn't be the case. We shouldn't. No single trade should make or break our account or our track record. They're just one piece in hundreds and hundreds, and probably thousands. Right? We want to have longevity, so you want to keep. That's one of the things, you want to keep the risk as small, that one single trade is fairly irrelevant in the greater scheme of things. It's the sequence of doing it over and over again that makes the difference. And coming to that same question, keeping the risk low, what is your typical risk that you take on your trades, Josh?
Yeah, so when I'm trading futures, I'm usually trading 5 micros, which is $10 per point. So my risk is, I like to keep it below sort of $200 per trade at a maximum. Sometimes I'll go in at a mini, but I sit between 5 micros and 1 mini. So I don't like to risk more than around $200 per trade. That's sort of my guideline, because anything past that, again, it's creating a bit more pressure on myself, and I've got to be comfortable with the risk I'm taking going into the trade. but yeah, so I'm usually risking between $100 and $200 on a trade. So yeah.
That's nice. All right, so
yeah, I had just a follow up on the other topic. So yeah, do you want to kind of get out as quick as possible? So in terms of losses, like if you start like with 1-2 losses, like how do you deal with it? Or in terms of changing your bias quite quickly, if you're kind of initially thinking maybe about going long, but all of a sudden you see something, you kind of go maybe change your mind and start thinking about going short. Like how often kind of how the experience kind of help you to get into that phase of being comfortable doing that, and if you do that.
Yeah, so my typical rule is if I have 3 losing trades in a row that are blatantly wrong, like they're not just wrong because of, I got a bit unlucky with the stop loss. If they're blatantly wrong, for me, it's like, I've been doing this long enough now to know, just walk away. The amount of times in my early stages where I continue to trade in those conditions, not mentally there, and you're just depleting that emotional capital for the sake of nothing. For me, if I'm not seeing it, I just leave, because it's the easiest way of just getting out of that headspace, because you don't want to get caught up in that, because all you're thinking about going into the next session is, oh God, I had such a bad day yesterday. For me, I'd rather go, look, I'm honest with myself, I'm holding myself accountable. If it's not working, it's not working. Again, it comes down to looking at the larger sample size, looking at the previous 100 trades. And a lot of traders don't have confidence in their strategy yet because they haven't got the sample size. That's the most important thing. For me, I can just judge everything based off my sample size, because I can just be confident that, okay, in the long run, this does work. It might not be working now, but it does work. I have the data to show it works. So yeah, typically 3 trades, 3 strikes, I'm out. But yeah, it depends. I know pretty quickly if I'm not seeing the market clearly.
But did you change your mind as well? Like if you think about going longs, but the price kind of sudden goes short, do you have the mental capacity to kind of sleep?
That's relatively easy for me, because again, I'm just looking at support and resistance. If I've taken a trade that's a long and then we're selling off, for me, it's easy to adjust, because I'm not, like, as you can see from my charts, I'm not getting fixated on a bias. So if I've taken a long trade, that doesn't mean that I'm only looking for longs. I have to be clear with myself that there's been a change in trend and I have to adjust to that. And that comes down to whether you're seeing the market clearly or not. And that's why I have the 3 strikes rule, because if I'm taking trades that are blatantly wrong, I'm not seeing it clearly, leave. So but yeah, I can adapt, with scalping strategy, I can adjust fairly easily.
Yeah, that's a good point, because again, just as I mentioned, it looks like that definitely it shows the experience that you already have in trading your own style, because you most likely you implemented those rules because you may have made many mistakes before that until like you suffered a lot. That you see one of the benefits of experience in the market is actually or some rules that you actually implement in their own trading strategy or plan is because of pain. Okay, it's because we did actually made a lot of mistakes before, and it's enough is enough. So we kind of implement those rules, the 3 strikes or whatever rules you want to implement. That's great. The mental capacity of being able to change bias is really important, because that's one of the problems as well. Many people just get attached to the bias. They kind of force the market towards what they want to see and not exactly what the market is showing, and they continue to be wrong and executing trades on the wrong side. That's a good point.
Completely agree.
Awesome, like that. One question I do want to ask you further, Josh. You said 3 trades that are blatantly wrong. What is a wrong trade for you? Is it a trade that your read on the market wasn't the correct one, meaning you thought the market would bounce from here, going long, for example, and it clearly didn't? Or is a wrong trade a trade that you made a mistake? Let's say you have a trade plan where you go through steps to get your analysis and where you want to be buying or selling, and you made a mistake. Maybe you skipped a step, or you forget to check something, and that's why the trade didn't you consider that as a wrong. So which one, to say blatantly wrong, which one of the 2 are you referring to?
I think it's a balance of everything. If I'm in a trade that I don't even see green in, for example, and I'm running instantly to stop loss. And if I find myself taking another trade within that area, and it's almost like losing that sort of mental focus with it. It's not always wrong on the entire move, because like I say, I try to adapt as much as possible. But often it's just instinctive. I know if I'm not feeling it. I know if my executions have been poor, because if I'm just not getting it right, maybe that is trading against the trend in an area where we are not. My trades they're just not working in that area. So maybe sometimes it's counter trend, and I'm just trying to force positions in that area, and sort of forgetting the general trend of the market. That can be something, if I'm constantly trying to re-enter, which I definitely found myself doing a lot in my early stages, because like Pedro says, a lot of traders feel like the market should be doing what they're executing based on. I'm in a long, so why is it not going up? That sort of mentality that a lot of traders have. For me, I know if I'm wrong. I can just feel it, and I just look at the trades, and if they're instantly running to stop loss, it's a good idea that it's not working. Because if I've tried a couple of entries in the same area and it's not working, I've just got to step back, let the market do its thing, and come back the next day.
Awesome. We have Yanis in the chat as well. Hi there. How are you doing? Good friend of ours. Thank you for stopping by. Great stuff. All right. So maybe you can. Would you? I know you only trade NASDAQ, but would you mind looking at, let's say, the EU chart, current EU chart, and tell us where would you be looking for a buy? I know the viewers are dying to see, what can they, how can they perhaps get contaged by your edge in some way or other. Can you perhaps go to the or any other asset you think, maybe the GU, EU, or some
or maybe gold? I think a few people are asking
maybe gold. Yes.
Okay, shall I give you
something
popular?
Yeah. An actual trade necessarily right now because it's not ideal perhaps, but just to let us know a little bit, let's do as if you're going to look for a trade now, and how would you execute the following?
Well, should I just look at NASDAQ, because we've just had a market open at 130. So I mean, I'm not really seeing much here. This is the only thing. So it's not a great example of where we are in the market right now. Because I'm not really seeing anything. So it's hard for me to sort of make a judgment, because we're at an interesting point here where we either come right back into this 430 level and we continue this down and maybe get into the 400s. But whenever I'm seeing the 4 hour looking like this, there's never a trade on, because we've seen a lot of times where this can flip red and we can slap pretty heavy. We got very close. I mean, I don't know how many, we got literally within sort of 7-8 points of the highs there, which is interesting because we're clearly showing some resistance coming through that level. And it was a pretty definite red candle there. I don't even think we got a wick on that candle. So yeah, it's hard to say here. Potentially we'll come back to it, because I'm not seeing anything that I'm really enjoying here. This is a bit of a weird point, because we've just had a very heavy sell-off within the last couple of 5-minute candles. So yeah, for me, really, I'm not looking at trading this sort of little range we've got here from like 430s to 480s. Yeah, I'm really looking for this breakdown to sort of retracing this push that we had back into 400s. So maybe if we get to that level, that could be an interesting spot. But yeah, like I say, I'm not looking to execute anyway before 245 is my green light, as I say it. I know there's a couple of traders in the industry that have a 245 rule. So yeah, it's hard for me to make a comment on that when I'm not really seeing anything in the market, and I don't want to sort of make a wrong judgment when it's not the right time for me. So we'll see. I'm sure we'll see something. Yes,
I'm sure too. The moment will come where you'll be having something interesting to show us, and then we can look at how the inner workings of Josh's edge. That would be fun to see. I'm sure scalping in general is a very popular trading style, right? It attracts a lot of viewers, traders, because the enticement of quick profits. The only thing is, it also means quick losses. So,
it does. Yeah.
it does, right? So that's something, with time, people will understand that not everyone is cut out to be a scalper. It's something you have to develop like any other skill. And some traders are, good at it. And by all means, they should continue to do that. But it's not necessarily for everyone. Awesome.
It's very much a personality thing.
Sure. I think it surely is. You got to have a certain way of thinking as well, right? If you're someone who is, quick to the punch, and compared to someone who would rather be, reconsider and think again and let it sit and rest and marinate, and we'll come back to the topic and then I'll take a decision. Those are two different kind of, personality. And one is when the viewers can guess which one is likely to be more suitable for, scalping. So it's the one that, doesn't want to analyze too deeply, right? They make their mind up with, a couple of things. They analyze it quickly and they act upon it. And that's something you have to develop with time, of course. Awesome.
Yeah.
So
I'm seeing a lot of gold. I'm seeing a lot of gold questions. I haven't traded gold before, I don't think. Maybe I would have placed a trade on gold, like on my first ever brokerage account. I'm not sure, but never traded it properly. View on DAX. I mean, we can have a look. I used to think that DAX was relatively similar to what is it? It's Germany 40 on CFD, isn't it? I'll just load this chart up. Yeah, so let me just get the. I'll just pull this up on.
In the meantime, everyone watching this, if you want to see us bring more traders like Josh, and as host or as guest, there is something you can do to make that happen, right? If you want to see more traders, either they be swing traders, scalpers on the seconds, or maybe the nanoseconds like Josh is trading, hit the like button and you can make that happen. You can make that. That will be a fuel, so to speak, for us to go out and get more traders, more exposure. As I said at the beginning of when I started, you want to have exposures to different styles of trading, because at the beginning, unless you're already, very profitable, then in that case, you may not need as much exposure. You have what you already profitable. You're good. But for everyone out there who's not profitably consistent or consistently profitable, I should say, you want to have more exposure to see, okay, what am I missing? What can I learn from Josh? What can I learn from Pedro? Maybe you don't have to trade like us, but there's one thing we do, just one single thing you saw us do on the chart, one single comment or remark we made that lights a light bulb to you. And, it makes you, man, I never thought of that. And you go out and you test it and it improves your trading. That's how you learn, through watching others. So if you want to see more of, want to have more of that opportunity, hit the like button, subscribe if you're not a subscriber yet. We just hit 70 and we're still growing. We're going like a rocket. We're aiming for the moon. So be part of it. Go ahead, Josh.
Beautiful.
Yeah. Okay. So
on that point, actually, there was someone asking that, or saying that they actually like your method, and if you do teach this at anywhere. Someone asked that question before. So maybe to able Josh.
Okay, so yeah, we do have an education company. Pedro is one of the coaches also. So there you go. You've got two of us here. So yeah, we can absolutely support you. The good thing about trading is there's a million different systems you can trade. There's a million different strategies you can trade. They might all work. but at the end of the day, it comes down to implementation. It comes down to understanding yourself from a psychological perspective as a trader, understanding your risk tolerance, your personality when it comes to the markets. But yeah, we do. So if you want to check out my trading work, I think the link's in the description. You can go ahead and have a look.
Perfect. All right, let's jump into that.
Okay, so to the person that was asking about DAX, this is the first time I've looked at a DAX chart for a little while. Obviously, as we can see, we've been slightly more heavy than NASDAQ in the recent sort of couple of hours. This is a similar sort of level. If I just bring up the NASDAQ 4-hour chart to show a sort of comparison between the two, let me just bring it up. We can see that a similar sort of level was sort of playing out with this. It's not quite the same, but it's similar with this sort of resistance that I'm seeing here. It's whether we were going to bounce. This is an interesting point because we've had a very strong move up. For me, this is a potential resistance area. So what I'd be doing here is I'd be looking at this and saying, okay, maybe between the sort of 50s to 30s area, there's a potential area to bounce. Now, again, I'm not looking for a huge amount, so we may still, in the next few hours, run through this low down to sort of 895s, but there may be a potential area to long this around this point. So I'd look at the 5-minute chart as we approach this. I mean, how far off are we? We're about 30 points off. So yeah, if we were to come into this area, potentially interesting for a long. It's just a bit difficult to really have a defined stop unless you're willing to give it a load of room, which I'm obviously not. So for me, it would be, okay, let's mark out this area around the 40s. Then I'd be looking at the 5-minute chart and seeing what sort of approach we've got to that price level. If we're slapping off and it's heavy, this isn't a trade. But if we're showing some resistance, this may be a potential long area. So for me, that's my potential thoughts. I still think we potentially run higher. Yeah, from what I used to see, I'm not entirely sure what the correlation is like now, but there used to be quite a clear correlation between NASDAQ and US tech. So potentially we'll see a push higher. Obviously, this is the high time frame, so we've got a decent way to run these highs. But yeah, so for me, I would be potentially looking at this area for a potential long. But it would be a small long, obviously, within my strategy, and it would have to align with the 5-minute chart as well. But yeah, that's a little bit of analysis on this. It could be an interesting area for a few points, but again, I'm talking about this from a scalping perspective. But yeah, I could see that as a potential area for resistance, but let's see.
You mentioned before, Josh, a wick retest, if I'm not mistaken.
Yeah.
Does that mean that once you have on the left chart there on the H4 on NASDAQ, you have a horizontal line where the last wick, where we broke out, we went through that last wick. Would that mean that's what you're looking for when price comes back from above? When we break a level, a wick, when we come back from above, in this case above, and we have that reaction. Exactly. Is that what you're looking for on your trade?
Yeah. So I'm primarily looking for that on the sort of 5-minute chart. I'm looking for a wick test. For me, a wick test is a retracement of 50%, no more than 50% of the candle. We see a lot of wicks that are sort of 75, 80% of the candle. For me, that shows that we're quite heavy in the market. I'm looking for around a 50% wick that is going to be following the trend of the move. So it would be a retracement into that level, into that wick for a potential move higher. That's what I'm looking for. But I mark it out on the 4-hour just because they're usually the wicks. If there's multiple wicks bunched up in the same area, like we're seeing on the 4-hour of the Germany chart, it can be an area of resistance or a potential support level that we might bounce off. But the wick test really applies to the 5-minute chart for me, or the 15-minute typically, because again, I'm looking for that quick bounce of price, as opposed to getting a massive move like on the 4-hour chart. I think you can still play wick tests on the 4-hour chart, but it's a slightly different approach because obviously you've got to have a much larger stop loss, but you're obviously targeting a lot more. But I'm purely looking at it on the 4-hour from like where are some strong support and resistance levels that I might be able to play into on the lower time frames on my scalping.
Yeah, I understand that. So you is that, and what would be not necessarily the trigger, but what are you exactly waiting for? Are you waiting for that move to reverse back, like it comes to that broken, or it tests that wick and then ends up closes higher, and that confirms that, and you get in there after the move, or are you getting in as it is making, as it is testing it for that possible?
I'm getting in as it's testing the wick, because with the NASDAQ, obviously I'm only targeting 10-15 points on a trade, say. So I don't need to get the full retracement to go higher. I just need to get a small amount of that wick. So I could literally get the smallest bounce of that wick test and be out the trade. The wick may still run and flush through it and go lower, but if I can get that initial bounce, that's why the precision is so important. If I can just get that initial bounce that is usually around 10-15 points from what I found, I don't care whether it pushes higher or goes lower. It's just, is it following the trend, and is it realistic for me to get a decent bounce off this position? Yeah, am I going to get a good enough resistance to that wick that I'm able to get a 10-15 point trade?
Do you use anything as divergence or anything like that on the lower time frames? Because I would imagine that you will see deceleration when it reaches that level, and that could tell you, give you maybe some statistics, some probabilities on that level holding, at least having that pop, not holding entirely, but at least having a little reaction. Do you look at convergence? Obviously, that means that will entail having indicators. You already said you don't look at indicators, but have you been checking that out? Convergence or divergence? I mean,
sometimes I look at cumulative delta, because that gives me a fairly good idea of the strength of price and how it's approaching those levels. If we're selling off on cumulative delta, it's typically a heavy move, and chances are I might not get it. I either need a positive cumulative delta on that particular move, or it to be flat, or but typically cumulative delta is flat. We're range bound, typically. So sometimes I'm looking at cumulative delta, but over the period of the time I've been trading, I know that the wick alone, as long as I know it's the quality of the wick and it's a quality setup, to get a 10-15 point bounce, you don't need much more than just the wick. If you're going for if you're going to stay in that trade, you're taking a wick and you're looking to run higher, you probably want some other variables, just as that added confluence that setup is pushing higher, and you're not going to be wrong on the trend. But for me, because I'm taking such a small portion of the market, I really don't need to overcomplicate the indicators and the things I'm using to add confluence. The 1 minute chart for me is a good idea, because again, we're getting that short-term range. So it gives me an idea of potentially, is it also showing up as a resistance level there? But no, for me, I just keep it simple, because like I say, I'm taking such a small portion of the market that I don't need to have all these additional confirmations. The trade works or it doesn't within a very fast time period.
Yeah, I totally get you, because when we come to the market, when we're starting to learn trading, at least that's what happened to me. I tended to wanted to add as many things as possible to my chart or to my trading plan, thinking the more is better, right? If I have more tools, that if one is going to signal me, a buy, then if I have 10 or 20, I'm going to get a better buy opportunity, or it's going to be a better move. In reality, it doesn't work like that. It's much better to keep it simple. Something we here in this channel, we talk about a lot as well. So when you said it as well as one of your mantra you totally fit with how we look at things. For example, I do not use volume, right? And there's a lot of good traders. Anastasiia is one of them who looks for entries based on volume, and she is a very good trader. She can know exactly where sometimes to the pip, and it's amazing. And if you look at that, I would see, well, and if I didn't have my experience, I would say, man, I gotta put volume on my charts. I gotta start learning about how I can adjust volume for my strategy and get more edge. But I've tested it, and with not only with volume, with many other indicators, what I've come to understand is that it's not always necessary, right? Sometimes with my order blocks, which are not based on volume, I get roughly the same areas where Anastasiia or other people who use volume-based trading get their signals. There may not be exact, because we have different strategies and things like that, but I can get roughly the same direction, the same area, without necessarily using any specific indicator, like in this case, volume profile. And to me, I've seen that many times. I don't need EMAs on my trading. They're very useful. They can tell you about the trend, about expansion, about momentum. They can tell you a lot of things, EMAs, but I don't use them in my trade plan. I have them on my chart, and just to look at. Sometimes you can see bounces and things like that. But for my actual trade plan, there's no EMA, no indicator other than ATR. And that's something that I recognize. You don't have to put it's a I would say like a scavenger hunt. It's an exploration to find the minimum amount of things that you need to have in your trade plan that will make you profitable. I think that's the idea. It's not about adding incessantly. It's about adding, testing, and discarding. Adding, testing, discarding until you have as simple as possible. I'd rather have something that has less moving parts, even if it's a slightly lower profitability. I'd rather have that because I know how the simpler it is, the more easier it is for me to execute it. And sometimes, making it more complex by adding 3 things extra will make it perhaps you may add, I don't know, 5, 10, 20% extra profitability, but you're probably in the execution, you're running a risk of this maybe, much more than what you gain on the profitability, just because when it makes it more complex. It's not necessary. It's much better to keep it simple, and that will make it easy for you to have a high fidelity between what you're supposed to be doing and what you're actually doing, right? That's a huge thing, and it comes with experience, but you don't have to necessarily spend a lot of years. You can just watch our channel and look for learn from our mistakes and our failures, so to speak, and as well as our successes. That's for everyone out there. You can fast track your way to profitability by watching our channel and learning from our experience. Someone asking here. Go ahead. Someone asking here is asking someone from the Louvre, from what we see at the profile pic, is asking Victor, don't you use macros? I'm not sure what you mean by macros, but do you mean higher time frames macros or some other perhaps indicator? I'm not familiar with that. Let us know in the chat, Vine Analytics. Let me see. Has anyone noticed a head and shoulder pattern forming on the gold? Let's look at gold. Maybe there is.
I'll stop sharing my screen, Victor, if you want to share your screen.
No problem. I'll put mine here. Let's check on gold on the 1 hour. Let's look at gold. What do we have? A head and shoulder? It is. Yes, it is, but it's already gone. I understand. It is a very nice one. Thank you for that, Adil Ansari. It's a very nice one, and I'll tell you what we see here. This is the left
Victor.
shoulder, the head.
He's talking about gold, not euro dollar.
Thank you. I clicked on it, but I didn't check it. Thank you. Keeping me on my toes. There you go. Let's look at this. What do you guys think? I don't know. Well, there is. I could see. Let me start here.
Maybe high. Yeah. Some. Yeah.
Well, there is to me if you're looking, depends on Adil. Tell us. You said 1 hour. On the 1 hour, I don't see anything. The neckline for gold is right here, at least for me, on the H4, and that's way below where we are. So there's nothing here to be seen. And if we zoom in, tighter, there isn't really anything. If you mean, well,
yeah, maybe I think he's meaning the short one to the downside. So kind of includes that left shoulder, the draw, the head, and yeah, something potentially like that. I think that's maybe the one he's talking about.
It could be, and if that's the case, then who am I to tell you that's not a head and shoulder? Because the thing is, you can have, the head and shoulder doesn't have to be all the time precisely symmetrical, right? You could have a head and shoulder where the bases of the shoulders are slightly uneven. That is an area where I don't trade them, I don't use them, so I wouldn't be able to help you in terms of probability and what it tells you on the market. There is to me, and that's why I don't trade head and shoulders. I take the quasis. I want to see the neckline being broken. So to me, this low, that's the neckline on the H4, and actually probably also on it's also on the H1, to be fair, or H2 in this case. It needs to break this first for me to start thinking, okay, once it breaks it, then we have I will consider this to be the left shoulder, the head, and the right shoulder still to be formed, right? So it is something similar, but it's not there yet. And if I go to the 1 minute, maybe if I zoom out, if I zoom in, there could be a reversal here, and it would make a lot of sense. And this looks interesting, by the way. Let me check the H4. Let me check. There is an H4 order block right there in the making, so it hasn't been created yet. But you have this Adil. This could be a good setup. Look at this. You have the only problem I have with this is we are doing it in a daily demand area, so you got to be a little careful about that. But it is we do have a possible H4 order block being created. So Adil, if you check again the market in about 42 minutes, and if this does close as an engulfing, meaning that price closes below that open, if it does that, I will make it automatically an engulfing, meaning that this would be an H4, and that would be the basis of my setup if it happens, right? So it hasn't happened yet. Don't jump the gun yet. If it were to happen, and in the meantime, at some moment we break after that, we break this low, right? So we'll have to. That will be the neckline on the H2. If we H1, that is. So what you want to be seeing in the market would be something like this. You have the established uptrend. It goes and breaks the neckline. It creates the H4 in the process, right, Adil? It breaks it, and then you can wait for price to come back to that order block that it created, that H4, right? And if you have it, if it created the H1 as well, the quasi, then you can start thinking, okay, maybe I can get a short from here. It's a little bit, a couple of steps in the future, and it's a little bit conditional. It depends on whether or not it actually creates the H4 and it actually takes that neckline. But that's how I prepare my, I have to think a couple of steps forward and thinking, okay, if it creates, I'm going to put my watch in about 40 minutes and see if it creates that order block on the H4. And if it does, then I can put some alerts, right? Some trading view alerts right here on that order block. And you can walk away, obviously not too far from your computer, but you can walk away, do other stuff, and then come back whenever you have that alert. That would be something that I could be, actually, I would love to trade that, because I would then understand that the market is getting ready to break. Probably that's the way it's going to break that daily. I'm not going to bet it's going to break it just because we have an H4 against D1 D1 is supposed to win more often than not. Okay, so that's, but if you have a quasi, that's a more elaborate way of the market telling you that, you know, we're pushing lower, we're likely to want to go lower, and you can target these structures in here that it created, or maybe the lowest point that it created after breaking that neckline. And if you are, you know, a little ambitious and it actually closes here, you can hold that position. You think by the end of the day it might close, you know, it probably something for not today, but maybe tomorrow. And you look at the end, roughly at the end of the last couple of hours, and it's looking good for a close below this level, meaning it's going to break the daily. And that's a reason to hold that longer for that continuation move, maybe a day or two later, right? So it's a very, I think it's a nice possible trade. It doesn't look like an order block right now, but we still have 39 minutes and a couple of seconds and a lot of nanoseconds that Josh is trading for this to close on the H4. So let's thank you for that, Adil. No problem. So what are we looking at, Pedro? What do you think? Where's the action today?
Yeah, I'm looking also at US indices to see what's going to happen now with US Open. So I want to see if there's going to be any selling pressure or not, or prices will just continue to skyrocket. Most likely there's going to be some volatility, maybe up and down, before price potentially can go in the direction that wants to go. If it is to beat like yesterday, we had the initial move to downside, and then we finished the day really strong to the upside. I think it's today, by the way. I think we're going to have Nvidia announcing their earnings. Is it today? I think it's today. At market closing.
I don't trade stocks. Yeah, I don't trade stocks,
but I think it is. I've got that written down.
Today. Yeah.
Yeah,
I do think for you it is important, Josh, right?
Yes, I think it is. Let me just.
Yeah, it's today. Yes, today. Yeah, no, I think in general, actually, for anyone trades indices, even though it's not stocks related, it is stocks related, but Nvidia is such a big stock in terms of also because of the AI and everything, and it has a really big impact on what NASDAQ can also do. So everyone is waiting. I think that's actually maybe the big news of the week, as I said, from the core PC on Friday. I think it's going to be the outcome of Nvidia. Nvidia had a great recovery, it's getting close now again to these all-time highs in here. So we'll see, but again, I'm not analyzing the video in here, but it's just also to as a reference, if anyone is trying to trade US indices at the closing, I think it's around 8:30 or 9 p.m. when the earnings is announced. So be careful with that. There's definitely going to be a lot of volatility around in the indices in that moment, and it can create a little bit of the bias or the approach to what we can expect in the future, okay? Because everything is related to AI nowadays, and that's one of the reasons why market just moved to the upside quite strongly after hitting the bottom. The earnings on Microsoft, Meta, Amazon, and so on, you're really strong on the investments that everyone is still doing into AI, and that actually helped the market to just move to the upside again in terms of the sentiment. So it's going to be an important one. But I'm going to be looking. I'm going to try to see what's going to happen. I can see that S&P is approaching an interesting supply level. There can still be a little bit of a move to the upside as well, but maybe can have a little bit of a move down. We just broke a low as well. So today we broke a low. Now it can fake out maybe this high in here, and you can have a little bit of a reaction on the S&P. And NASDAQ, I think is going to take the highs. I think it can take the highs before the move down. I don't know if it's going to create kind of a triple top in here or not. We'll see. I think also looking up to the left side, I think price can go a little bit more to the upside. So NASDAQ, I'll be at least waiting for a fake out to the upside before looking for shorts. Again, I'm a contrarian trader, so I'm looking for shorts in here. Dow also is reacting from an interesting level. I'm actually short on Dow right now. I just shorted it, entered actually in here. So we'll see what will happen. Yeah, I basically entered right now in here. I'm aware that price actually make this move down, just reacted from this support resistance. So this is actually a good level potentially to go higher, but I'm looking for some target already around this level. But yeah, I just shorted in there. I like where price is reacting, kind of this structure in here, a strong level of supply. So I'm looking for a reaction between this level to see if I can capitalize on a move. If price starts breaking this level, then I may look for a new short, maybe potentially to go even worse. So that's a little bit DAX as well. Just finalize on DAX. I agree with Josh with what he said. I think this level can be important. This traction here, kind of around the 2440 or something like that. The one difference between the DAX and the NASDAQ that just to compare is that DAX is already breaking a new all-time highs. The NASDAQ is still a little bit behind in that sentence. DAX is again at all-time highs, and I think we can maybe trade in between this level in here. So who knows? Maybe it can go higher before it goes down, or if it goes down from here, then it can go all the way to the upside. Until it breaks this level, it's just within this structure we're going to be looking for. But we are 5 minutes away from the US Open, so we'll see.
Yeah, I think this could be a good opportunity. I want to sort of switch it up and get the chat involved here. Obviously, everyone trades different strategy.
Bring your charts again.
Let's bring everyone together. I'm interested to know, in your trading right now, what are you pinpointing that you're not liking what you're doing? What are the things that you're currently struggling with? What do you think you want to work on in your trading? Because I think that it's important to get that advice from that standpoint from us who have been through it and understood the experiences. Because everyone trades different strategy. What we do might not be relevant to you, vice versa. So I think there's some common ground with understanding where you're struggling, where you want to improve. So if people want to put that in the chat, then feel free, because I think that could be a good opportunity for us to learn a bit more about you guys and hopefully point you in the right direction.
That's a good point.
Just to comment in here on the Vine Analytics and Sofian. Indeed. They're commenting about Nvidia. Nvidia has definitely been the kind of holding all that Big Seven in the US, not just Big Seven, but also the actual US indices. So it's going to be, as Vine mentioned, it's going to be a good insight after the tariff issue. So there is no safe water. So it's going to be actually an important one. It's one of the most important earnings that the market pay attention to for the last couple of years, basically, or since the AI become a big thing. So that's going to be important to look at. But we have here the first comment, Turtle Adrenaline. My struggle is something you talked about before. How do you accept bias change if you are wrong? What's the process thinking behind it? Okay. Who wants to reply to this one?
Who's going for it? I'm happy to go for it, but if someone else wants to jump in,
ahead, Josh.
With that.
Go ahead.
Okay, so
Throttle Adrenaline will be happy with your answer. Go ahead.
Yeah, hopefully I can deliver for you. The accepting change in bias if you're wrong, I think the process behind it is to take a bit of time to step back. If you've been in a trade that's hit stop loss and you've got the bias wrong, take 10, 15 minutes, 20 minutes to step back and watch the markets. Be out of a trade, understand what the market's actually doing without your thought process being, I'm in this trade, why isn't it doing this? Take a step back, look at it from a neutral perspective and go, okay, the market is making this move. Now let me readjust my thoughts based on where we currently are. So if you're wrong, take a step back. Because again, it sort of comes down to what I was talking about earlier of you don't have to be in every move. You don't have to take every trade. You can step back, think about the long term. So I think that's something that I do particularly. If I'm wrong on a trade and I'm wrong on the bias per se, if I'm wrong on the general direction of the trade, I will take a bit of time to step back and readjust my thoughts and go, okay, neutral, this is what I'm looking at. This is objectively what the chart's doing. I'm going to refocus my analysis and my attention back on what the market's actually doing versus what I think it should do or what I think it is doing or whatever. If anyone wants to add to that.
Yes, I would say this, Throttle Adrenaline. It seems like you like the fast-paced world. Looking at the profile pic, that looks like a quarter of a mile drag. I like that. Lots of adrenaline there, and certainly Throttle. This is what I would say. For every idea you have, whether it's a specific setup or just a concept, like a structure, like I call them like an order block, but it can be anything. It can be another structure. It doesn't have to be necessarily something on the graph. Before you act upon it, so before you take a trade, decide for yourself what needs to happen for that idea to be invalidated. Okay? So, and that's one thing. So before you enter the trade, you should know, okay, where will I take the cue of the market that I'm wrong? Because the setup, it could be that the setup isn't actually wrong, but maybe you enter too early. Maybe your stop loss is not adequately placed, meaning that you're eventually will be right, but it will still result in a loss. So, and there's a distinction between actually being wrong on the idea and being wrong in the trade. Okay, so as long as the idea hasn't been invalidated, you shouldn't conclude that your trade is wrong and your bias needs to be changed just because you lost. Right? So when you understand that, then you can maybe reassess after one loss. See, okay, is my stop loss still in place? Obviously, you want to double check if the idea is still valid, and see if there's another opportunity to get in, perhaps. And once you have, before you enter, right, before the whole plan of action comes into execution, before you enter, you have a clear idea what needs to happen for that idea to be invalidated. It's going to be much easier for you to accept the trade is your bias, your expectation is wrong, because you had something. I tell a lot of the times, I say, this is the test of the market, right? If the market does this, then it tells me something. Either it confirms or invalidates. So once you have that task for the market to invalidate your idea, your structure, and it does what you agree with yourself beforehand, that if it does that, then the plan is off the table, then it's going to be very easy, right? Because you know in advance, you don't have to think about it, you don't have to analyze it. It did it, I'm off. If it does this, I'm out. And that makes it a little bit easier, because we tend to, in the heat of the moment, when you hit a stop loss, perhaps even more so when you hit multiple stop loss, your chimp in us, right? The chimp in us, the primitive mind, the emotional, impulsive one in us gets, a lot of the time, gets the overhand. But you gotta be analytical. You gotta be, the more analytical part of your mind needs to be in control. So one way to do that is doing what I just mentioned, which is having clear ideas beforehand. When is it you're going to stop believing in this idea? When is it invalidated? I hope that helps.
Yeah, basically, I'll just add into that part, basically everything that you guys have said as well. But one of the ways that you can help yourself is to plan your day. I know that Josh mentioned that he's not really kind of having a plan, and this comes with an open canvas and fresh, so it is not married to any bias. But that comes after many years of experience. Okay, so if you are kind of still new, one of the ways is actually plan what kind of approach or setups you are looking for, what levels you want to look at, and that's it. You only trade basically around that level, because this is a process between you taking a trade and you being wrong, and after you are wrong, you stop. Okay, you don't need to change your bias straight away. Like if you're looking for longs and all of a sudden the market invalidates your long and you get stopped out, it doesn't mean that you need automatically just change bias and start looking for shorts. Maybe a first process is you stop it, and if your bias in the beginning of the day was to look for longs, you stop in that moment. Okay, you took your loss, you're long, your bias was incorrect, market did the opposite, and you stop in there. As you gain more experience, then you can start helping yourself to go, okay, now I was looking for longs, I got stopped out. Now the market is actually showing clear indication that based on your strategy, on your analysis, that maybe price actually wants to reverse. Now you can start looking for those shorts. Okay, but can be a process. It doesn't need to be automatically. You can go step by step. Maybe you can first take that loss, stop, journal, okay, study, look at the confirmations that you're looking in the market to actually help you to decide that now price actually is moving to the downside, and then in the future, as you journal more times, as you gain more experience, now you can actually jump into those shorts. Like Victor mentioned, know exactly which levels maybe invalidates your bias, and you can go along with it. But most important is it's a process. It doesn't need to rush into it, and Yeah, that's an important part in here. Okay, take your time. Take your time to get there.
Awesome. We have some great
I completely
questions
agree.
in the chat.
Give me 2 seconds.
Another
Someone's at my door. I'll let you crack on. Someone's at my door. 2 seconds.
no problem. So we have a couple of questions here. I'll leave this one for Josh when Josh comes back. My win ratio is a 30%. Can I scalp? Maybe we can answer this anyways. Well, the thing is, scalping is not necessarily, doesn't have to do with your win rate, right? Scalping, the definition of scalping is, you have a number of definitions. One of the definitions is how long you hold the trade, right? If you just hold it for a couple of seconds to a couple of minutes, by some definitions, you are already scalping. The other definition is you're just taking a small size of the market, right? That's where the word comes, the scalp. It's not a very, graphically nice thing to think about, but that's a scalp, right? It's a slice, a slither of the market, meaning you're only going for a couple of ticks or a couple of points to the next level, right? And that can happen in if you do it on a little higher time frame, it means that you're still longer in the trade, but you're still scalping. You're still just going for a little step, and that is actually that is separate from your win rate. Now, it is true that swing traders, typically, they are trying to catch a trend, right? They hold for longer term. They're trying to catch the trend, and usually they rely on holding winners for longer, meaning their win rate is typically lower in the range of 50, 40, even 30 sometimes, right? And that makes you think that scalpers typically need higher win rate, and that is generally how the averages run, but you don't have to. You can be a scalper with any win rate. As the same thing, you can be a swing trader with any win rate. You can, when you're building your system, right, your trade plan, you can make choices that makes your win rate higher or lower, and it is something. You can find profitability. That's what I'm trying to say here, on the whole spectrum of win rates, either be it low or be a much higher. Okay, so it's not necessarily that the win rate will exclude you from being able to be a scalper. It is possible. We have one question here, Josh.
Yep.
In your opinion, what would you say something with 30% the win rate? Would they be able to scalp?
Yeah, I think there's a lot of different variables. I think at the end of the day, a lot of it would come down to your risk management, because a scalping strategy, the typical scalper typically has a fairly high win rate. That's the general rule, that from what I've experienced in the scalpers that I've spoken with, the win rate is pretty high, because the traders like me that are taking a small portion of the market, the probability that you'll get that proportion of the market in a quick period of time is highly likely. So with a 30% win rate, I mean, are you judging that 30% win rate off your current strategy? Because that's the other thing. If you're currently trading a high time frame strategy and your win rate's lower, you might find that actually with scalping you have a higher win rate. So I wouldn't get caught up on the fact that your win rate's 30%, because I don't think it's relevant to scalping unless you've got a 30% win rate from prior experience. Scalping, you can't compare your current win rate with a scalping win rate, because I think there will be a differentiation. I think, as we've discussed throughout this call today, I think a lot of it is going to come down to your personality, your risk tolerance, your ability to adjust to market conditions and biases, and understand what the market's doing in real time in quick succession. So I wouldn't deter you from it. I'd actually say that you should think about what sort of trader you are. How are you currently trading? And does it suit your personality? Does it suit your approach to the markets? And if scalping you think is something that you could adapt to, then by all means give it a go. So I wouldn't say that having a 30% win rate in your current stage is going to hold you back. I think at the end of the day, like with every strategy, it comes down to sample size and understanding if it's working for you. That would be my biggest bit of advice. Just if you want to get into scalping, understand that it's a very different way of trading, potentially to where you're currently trading. So, but yeah, I wouldn't say that you should be put off by a 30% win rate.
Yeah, I one thing I didn't mention was that what the viewer is actually asking us is, can you be profitable trading like a scalper with a 30% win rate? And I didn't touch upon it, but actually profitability doesn't depend on your trading style, right? So, and it doesn't depend on your win rate solely either. It's a combination of your win rate and your risk reward ratio, right? It's those two that decides whether you're going to be profitable or not. And you can have on the whole spectrum of higher win rate, lower win rate, the combination with risk reward ratio, it's the right combination that will make it profitable. And that can be done on every trading style, as a scalper, as a day trader, as a swing trader. So it's actually it's just one variable that doesn't decide whether or not you're going to be profitable or not. The truth is, the truth of the matter is, though, that scalpers typically have very high, because they're just going for a couple of points. Not all of them, but many of them also trade negative risk rewards, meaning that their stops is much wider, and they don't. That's why they don't put in their stop necessarily, because it's not nearby. They have plenty of room for the market to breathe. They just need one little move and they're out, right? It makes it very easy for them to hit their TP, and that's why the win rate. But not necessarily. You could have although it's not typical, but you could have a high risk reward ratio, a low win rate, and still going for a scalper. You're going to be going very, very tight. I wouldn't recommend it, but it is, in theory, it's very possible. And you can actually, it's when you're building your system, you're making these choices, and only the win rate isn't enough to discard you becoming a scalper. So there's nothing holding you back, John P. Scalp as a career is all open for you. Don't lose hope.
Yeah, absolutely.
Stephen J has another question here, or actually, I think this is meant as something that he is working on, Josh, to improve in his trading. He said, "I'd love some tips to shake off bad habits. Mine is removing stop loss. What do we say to this dear viewer?"
Okay, so when I look at this from a trading coach perspective, I have heard this a lot from traders, and I think it comes down to not having the confidence in your strategy, or not having the sample size. Because if you are removing your stop loss in your trade, that would show that you're not fully understanding of your strategy and your trading plan. Because if you aren't clear on your risk, then you need to do a lot of work actually understanding the sort of trade you're taking and what your strategy actually outlines. Because removing a stop loss is, that's quite extreme. It's an extreme decision to make when you're trading. And I think for you, you've really got to understand your strategy. That just sounds like it's something that should be an easy fix, but maybe there's that psychological thing of it is a habit, you've got to break it. But I think a lot of it is going to come down to the understanding of your trading strategy, your trading plan, and being very clear on your risk management. Because once you have that as your understanding, it becomes the foundation of not going into bad habits like removing a stop loss, because that can be very reckless. I see a lot of traders who they remove their stop loss and it works, right? It might work a few times, but the moment it doesn't work, it's catastrophic. And then for traders, they go, "Oh yeah, but I did it 3 times and it worked. And then it doesn't. And it's very hard for traders to break past that mental barrier when they just don't understand the implications of doing it. Yes, you might get lucky a few times, but you have to balance out the risk. On the times that it works, okay, it might be great, but the times that it doesn't, you could potentially risk your account. And that's going to be a realization to you to understand that that's not something you should be doing. It can be very reckless in your trading. So I'm sure everyone else probably has a similar viewpoint, but if you want to add anything else.
Well, I have a bold prediction, guys. I know I'm as traders we don't do prediction, but I have a bold prediction. I predict that in about 15 years, someone called Jaden is going to be a great trader. Someone called Jaden. I have this bold prediction. In about 15 years time, we're going to check back on this prediction, and we're going to see if Jaden has become the great potential trader that we see in him. Awesome. So
Absolutely.
let's continue.
Let me just add one point also on the stop loss, like especially if that's the bad habit that you have. As just said, yeah, it can be something related to the way you are taking your strategy, approaching your strategy, but most likely also it looks more of a psychological situation in there, or most likely maybe checking within your life. It looks like someone that removes stop losses. It is because he's not accepting their losses, first of all. Therefore, he's looking for perfection. Like he's still not accepting that the probability that the market is. Like trading is about probabilities, and that involves losing as well. So most likely he's looking for something that is 100% perfect, which doesn't exist, but that can lead into your younger self of trying to get A grades, and maybe you are a great student. Everything that you're doing as a young student and everything else, it was always achieving the high marks possible, like 100%, almost in all exams. Maybe you have a lot of pressure also from your parents as well, expecting perfection from you. And then when you jump into trading, that's not possible. No one is 100% perfect. Everyone makes mistakes. Everyone has losses as well, and you're trying to replicate exactly that type of behavior, which is impossible. So your relationship with loss needs to be dealt with, and you need to understand a little bit why exactly. Ask your questions. Why are you actually not taking or accepting those losses? Like, what kind of pain do you feel when you do have a stop loss? Like, do you judge yourself? Like, you feel that you are less of a person, or kind of you just automatically feel that you make mistakes and you don't want to have that sensation? Yeah, you need to understand a little bit that with trading, you're going to have losses. Basically, we as traders, we are data analysts, okay? That's what we are, okay? We are just collecting data, and then we are going to analyze. It's like you're trying to find a cure for something, okay? You are doing a lot of tests, a lot of runnings, that the tests equals our trades, and you are collecting data, okay? And then eventually you're going to analyze your data and you see what works and what doesn't work, and you most likely want to continue to repeat what is working. Same thing as you're trying to discover disease. Whatever is not working, you just remove it. Everything that goes into alignment, you maybe start looking for more variants until eventually you find out a cure of something. So that's basically what you're doing in here. Like, take that approach. So a loss is nothing more than something that you can eventually eliminate from your trading in the future. And something that was wrong in there. But yeah, that relationship with losses and perfection can be a big thing in there.
Yeah,
I think you guys covered a lot of things. I'll keep it short. I'll say have a trade plan that you tested out and apply that trade plan to the market, and you'll probably see that removing stop loss will not be a plan, not be a piece or a component in any profitable trade plan, right? So the whole process will automatically tell you that removing stop loss is not something you want to be doing, right? Have a plan, test it out. When it's profitable, apply it to the market, and that's it. Don't do last minute impulsive things like removing stop loss or any of that. Have a plan, trade the plan. Yep. Perfect. Let's see. We have about 10 minutes or so into this still 4-hour stream. Remember, guys watching, we have about, from what I see on my screen, about 1,000 people watching this live. Thank you for all of that. All of those who are watching, thank you. However, I would like to ask you a favor, a little favor. It concerns just the movement of one finger and the mouse in a particular place on your screen, right? If you see the thumbs up, go and click it. Don't worry about what it does, but just do it. It'll be fine. I promise you. All right, so let's see. We have 2 questions more, and we have one person who wants me to look at euro dollar. I'll see if we can manage that before we finish the stream. But in the meantime, we have a couple of, I think, at least 2 good questions here, which we... someone is having paralysis, not literal, but someone is having analysis paralysis by knowing too much. Don't take it personal, fine. Analytics, it's a way of saying. I'm not being too. I'm not trying to do anything funny here. But what do you guys say when you are being affected? Have you guys had this before, Pedro or Josh, where you
Yes.
have know too much things at once and you're not sure what to do with all that information? One indicator says buy, the other one says sells, and hell, what do I do?
Who wants to go
Yeah,
first? Pedro?
I've suffered from that. Actually, that was one of my biggest issues. My biggest issue was not overtrading like many others. It was actually the ability to, or the fear of executing a trade after acquiring so much knowledge. I don't think the issue in here is about how many indicators you add into the chart. I think the question is, because based on previous comments from Van, I think he likes macros. We also look at fundamentals. So I think he's trying to collect as much information as possible from the fundamental side, and maybe even some sort of price action, and then to come up with a to define an entry or execution of a trade. It can create many doubts, okay? And then in the moment of executing a trade, many thoughts cross his mind, and he ends up second guessing himself, and he doesn't execute a trade. Myself, it was more focused on price action, okay? An issue that many traders, I believe a few traders also struggle with it, which is, okay, everyone starts, they lose money, then eventually start wanting to learn something new, just to kind of, okay, it's my phase of trying to now understand what I have is trading and how can actually define a strategy. But something that I did a lot, especially when you then jump into naked price action and market structure and maybe SMC or ICTs or something like that, it ends up being a little bit subjective, okay? And something that can lead into a bad habit is wanting to learn a lot, okay, acquire as much knowledge as possible about the topics, and at the same time that you're acquiring all that knowledge and you continue to practice, maybe backtesting and practicing, you are not actually executing trades in real time, okay? You are just kind of working on your analyst mindset and kind of studying the market, but the trading side as a trader, being exposed to risk, actually taking trades and leading with losses and everything in between, like managing your emotions while we are taking trades and all that stuff, you are not exactly dealing with it. So that's something that I suffered quite a lot, because there was a period of during my journey in the beginning where I kind of spent a lot of time, like maybe 6 months or a little bit more, almost just studying the market, learning as much as possible, okay? But there was a big difference between my knowledge and actually my skill as a trader. There's a really big gap in here, and every single time that gap was getting wider and wider, and there was a big problem, okay? Because in the moment that I saw, for example, a trade, and I didn't execute that trade, and the trade would pay out quite nicely, I would start, first of all, being upset with myself for not taking the trade, feeling revenge, and kind of starting to talk bad thoughts going through my mind. Okay, and then eventually when I do take a trade, maybe that trade is a loss, and then I start thinking, okay, again, after a few trades, I'm losing money. It's again, maybe my skill is still not there. So let's analyze let's study a little bit more. Let's spend more time kind of understanding how the market works and so on and so forth. And always kind of pushing the trader side of me always backwards. Okay, so getting really good at this part, but really weak or not strong as a trader aspect. So you need to close that gap. Yeah. You need to start getting exposure and take trades. Maybe start taking trades with less risk just to get more comfortable. Okay, that was something that I started doing. Okay, almost take trades that doesn't really matter anything to you, but at least you start getting exposure to the market, being involved in the market, in the fluctuations of the market. Okay, and then journaling. Okay, journaling is a big part as well. So that's a way for actually then you can implement all your knowledge into your own trader side. Okay, and you actually collect the data based on that. That was one of the biggest issues that I had. Second guessing myself on the moment of execution because of how much knowledge I had, and there was a literally big gap between my trader side and my analyst side. And when you're approaching the market, okay, just a last tip, when you're actually approaching the market, like either you define certain hours that you actually want to trade, or when you're analyzing the market, the moment of execution, keep your analyst mindset, okay? Keep that side away from the moment, okay? Do your analysis either end of the day or kind of straight away in the morning or over the weekend, and in the moment the execution trades, come ready to execute trades, okay? Don't overthink, just execute trades, okay? And trust yourself. That's basically what I went through.
Yeah, I completely agree with what you said, because a lot of traders, they focus on consuming so much content, but they actually forget the importance of screen time and watching the charts and actually implementing what they're learning. And yeah, I don't really have much else to add. I think you've hit it spot on there. What I did just want to cover on quickly, NASDAQ, I know that I mentioned at the start of the stream how I was interested in that 405 level on CFD pricing, so whatever. Just a little update for everyone that was interested in that. I'm no longer interested in that trade because, as I mentioned, I didn't want to see us run the highs before we got into that level.
Josh, would you be able to show your chart to have
Yes,
so we can have visuals on it?
Yeah.
Those who for that one person, or go ahead. Can I put your screen on?
Yeah, can you? I'm sharing, so
yes.
Let me know when you can see it. Are we all good?
Yes, we can see it.
Okay, so as we saw here, obviously looking at the 4-hour chart, we ran the high and we ran it by, say, I don't know, 20 points. But as you can see, we're very heavy on this 4-hour candle. And as I'd mentioned, coming down into this 405 level, which is now only 20 points away, we nearly did it on this prior candle at 414. But we look very heavy. And for me, I'm not entirely sure what I see happening after this point, whether we do retrace this. You know, we've still got 2 hours left of this 4-hour candle, but I'm not entirely sure on how we're going to approach this point. I would have liked to have seen it come down as the 405 levels before pushing higher, but we haven't done that. So it'll be interesting to see how it shapes up on the 5-minute, but I'm not overly confident in this position. And I think that's why, okay, yes, look at the 4-hour here and identify a potential point of support, but then look at the 5-minute, look at what we've done. I mean, we have that 5-minute candle was like 60 plus points, nearly 70 points. So for me, that's a very heavy candle, and it looks like we're going to get a bit of continuation lower. I don't know how much further. If we may still get a bounce point of 405s, but for me right now, it's not something that I'm overly interested in because I think we might come through quite heavily. So we may end up seeing, I know the stream's over in 3 minutes, but that's not a trade for me anymore because of how heavy we are looking on the 4-hour chart.
Thank you. Thank you for that update, Josh. Pedro, do you have anything before we wrap our stream? Anything you would want to add?
No, that's it. Good questions, guys. Thank you very much for sharing and for also being open with your struggles. That's one of the things that we are here to do. Yeah, Conscious Day Trader also shared really nice tips as well for everyone. So that was really good. Yeah, that's one of the purposes as well of the live stream. We are here to do analysis. We are here to do live trading. We are here to share our experience. My previous answer was really personal experience. Okay, it was definitely the main issue that I had. It was kind of second guessing myself and not again that big gap between the analysis or the price action analyst comparing with real trading. Yeah, thank you, and welcome, Josh. Welcome to the live stream.
I'm liking it.
Host.
Hopefully, you guys found what I've said so far interesting, because I'll be sticking around for a while longer. So hopefully, you're interested in me staying around. But no, I've really enjoyed it. I think the chat has been great. It's been really cool to learn more about everyone as individuals. Victor, it's been great to meet you. I've been watching the streams and learning. It's been a pleasure.
Likewise.
And I'm looking forward to it. The next few weeks and however much longer will be really cool. And yeah, I appreciate everyone's time and thank you for the nice welcome into the community.
Thank you, Josh. We with open arms, we welcome you because we need traders like you who can expose our viewers to different kinds of trading methods. And I would like to thank everyone watching today for your engagement. You've been great viewers with all these great questions, some of them quite deep, and I like that. Keep them coming. If you want to have more chance to, ask questions to authentic traders like we are now displaying, you have a chance tomorrow. And 4 times a week we are on where you can ask us, to analyze a asset, and you learn by example. You look at what we're looking at, and get different exposure, as I was saying previously, and everything for you to become a better trader. I was gonna say something about the workshop. We're gonna have a workshop in the Discord community in about 45 minutes. I'll be hosting that, so you're welcome to join us on that occasion. The only thing you have to do is get an account with the 5ers. The smallest one will do. 5K high stake account, $39, and you have your entry. You don't have to do anything. It comes free with your account, the Discord community, and it's a blessing. It's a really blessing. Just come in and test us out, and you'll see that it's a great community to be part of. All right, Pedro, Josh, I would like to thank you as well for your moments you gave us today. Everyone watching,
Thank you.
Hit the like button, subscribe if you haven't yet, and let's meet again tomorrow. See you. Bye-bye.
Absolutely. Looking forward to it. See you guys.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.